All right, I'm hearing some blue hair giraffe talk in the comments. What's up, everyone, and how are you this June 9th Tuesday? It's a special day for one of us. If it's not you, maybe it's me. Yeah, working on the birthday. I'm also putting some socks on right now. I literally just got done with my shower because I literally just got done running because I literally just got done packing up and shipping another 9 orders because I literally got done doing a video because I literally got done waking up early, hanging out with y'all today. No, I did not take today off. I decided, you know what? Let's do what I like the most, and that's being productive, busy, hanging out with y'all. Guavo Honcho says, I sold all my crypto, but I'm still hanging, watching you, Klaus. Well, thank you. I appreciate it. Yeah, I know we got right up on the screen, and we're going to talk about that. We're also going to talk about what Congress has problems with. Now, mind you, hold up. Everyone just pay attention really quick here. This is for the House, okay? So when the Senate gets done with the Clarity Act, hopefully they do, okay? Hopefully if they do, the House has to do it. Let's see if there's anything that pops up with the House crap today. They're going to be live at 2 p.m. Eastern. How are y'all doing? Oh, gosh. Hanging out, enjoying the day today, and enjoying hanging out with you. We did have some storms, though, this morning, which was kind of a pain in the butt. It kind of messed up my schedule, but that's okay. We are making the best of it. David Jones says, how do you keep up with that level of working out, man? Honestly, it's just habit. I love working out. I love being busy. I love working. I love training. Like, so my wife asked me, she's like, dude, you know, it's your birthday, let's go out tonight. And I was like, no. I was like, let's go out on Saturday. I got a race this weekend, right? I was like, I got a big race this weekend on Saturday. I was like, dude, let's just go out after my race. I'll be able to hang out, enjoy myself. And she's like, dude, you don't even like want to go out on your birthday? And I'm like, dude, I'm doing things that I like on my birthday. Last birthday, I was super sick. For those of you that have been hanging out with us on the channel for a while, last year on my birthday, I was very, very sick. I wasn't even allowed to run. They had me staying on the couch the whole time. I was doing videos and laying on the couch for like 3 months straight. Search. Jay says, having a Michelob right now. Cheers. Happy birthday. Well, thank you, kind sir. Now, that being said, I did have to get a little bit of motivated to deal with Congress today because I'm expecting some stupidities, you know? Oh, gosh. So, the deal is this. Volume, not the best, okay? So, even though prices are where they're at, respectively low, we have a little problem with liquidity. SpaceX IPO, honestly, a lot of people are thinking that's what's sucking up the energy out of crypto. I think a lot of it has to do with Clarity Act stalling. And because Clarity Act is stalling, there's another subset of people that are like, F it, I don't want to wait for regs. I don't want to wait another 2 years, year and a half, 4 years, whatever it's going to take. So I think that's just part of the story. Now, AI is going to have that story too because AI has been going on for years and years and years. There's been a lot of investment in there and a lot of people have not made money. And I'm not talking about like the trading of stocks. I'm talking about the companies that do AI. That's one of them, right? SpaceX. We were talking about the SpaceX thing. SpaceX spends an ass ton of money on AI. They're not profitable on it yet. So you kind of have to think about that, right? The AI bubble, the same thing's going to happen. There's going to be players that look at it and go, okay, I can't freaking wait that long. I can't freaking sit here and wait 3 more years for AI to make a profit. I want to make profits now. JG Wentworth, 877 cash now. No, they're not a sponsor, but that fucking commercial's burned in my head. You've heard it too before. So it's a combination of regs stalling and another big opportunity of the similar demographic that's coming into the sphere. A lot of happy birthdays in the house. Well, thank you. I appreciate it. Roll says, oh, taxation, why not try to have ways we can make money instead of taken away from us? Agreed. I don't mind if I get taxed if I'm getting something for it, right? I mean, I think we could all say that. Taxes aren't a bad thing as long as you have amazing schools, amazing roads, amazing healthcare, right? Amazing social systems, amazing economy. You don't mind taxes then if everything's going good. But if you're paying an ass ton of taxes and you're not getting much for it, that kind of sucks. So we're waiting for Congress. They're going to be fired up at 2 p.m. Eastern time. From now until then, we can hang out and talk. I am repping the Antigua, Guatemala jersey today. Thank you very much. They're playing in the Central American Team Championships. It's kind of like the Champions League, but of Central America. Just throwing that out there. Jared says, happy birthday from Vancouver. Appreciate it, buddy. By the way, shipped out the first Canadian order today. How freaking cool is that? Those that ordered merch that are from Canada, I've got a way to ship it out to you pretty easily. Nice. Mike says, happy birthday. Thank you. Thank you very much. I appreciate it. Appreciate it. Trick says, get yourself a queue of cabbage on me. Oh, I might have to, kind sir. Let me just get you a big comment. Big thank you, kind sir, for the gift. Hold on. I gotta type it out. I type slower than I talk. Thank you very much. And everyone, give Trick a big thank you for supporting the channel, because as is customary in the channel, every time someone supports it, we thank them. RPM giving a little bit of thanks as well. Tyron says, ethics will kill the clarity bill, DOA. Sadly, Trump and others will still make money with their stable coins. Ripple, Coinbase, JP Morgan, retail will get smashed at the banks. Yeah, I gotta be honest with you. And Bojangles dropping a happy birthday for me. Thank you, member, 53 months. I appreciate that. Yeah, I'm wondering about that. I did this story yesterday, and it talked about like the ecosystem of crypto. And I think a thing that a lot of people forget is that crypto, and we're going to the whiteboard. Yeah, you asked for it. We're freaking drawing. It's my birthday. I'm drawing today. Leave me alone. Okay, so crypto, a lot of people thought what crypto was these coins that you see up on the screen, right? That's what a lot of people thought. Well, now we're kind of learning, though, that crypto is more than that, right? It's stable coins, it's the miners, dApps, exchanges, ETFs, other derivatives, security rails. Crypto is a big ecosystem. Tokenization, right? That's a really big one. Tokenization is money flowing into the crypto ecosystem, but it's not seeing its way for what? Not seeing its way into the coinage ecosystem. Norfolk giving Trick a big thank you, everyone. Love that. Redline Autos and Diesel as well. Ooh, Bojangles, chicken is fire. Agreed. Muchos gracias, Senor Trick. Very, very thank you. Wigbusters out on short term again. That's not good. We got to take care of our wealth or our health more than anything, because wealth, we can always make more money, but we can't make more time. Happy Tuesday to y'all. So that whole crypto ecosystem is something that's garnering more money, right? Stablecoin volumes going up. Stablecoin market cap is going up. Tokenization is going up. There's a lot of things in crypto that are going up. We're just not seeing it with crypto. And what Tyron is saying is, look, hey, you are not going to get the Clarity Act. And if we don't get the Clarity Act, your stablecoin builders are going to make the money, but we won't. And it's like, oh, okay, I see what's going on here. So just kind of keep that in mind, all right? There's an ecosystem to this all, and there's this whole, I guess, vacuum for what we like to get into. Alles gut? Yeah, alles das very good. Thank you, Agar. I appreciate that as well. So right now, what are you noticing? That the volume of crypto has just been soft, right? If I zoom out a little bit in here, I'll move this so it's not out by my head. Look at this. Volume hasn't been the best. In fact, let's go to spot volume real quick, see what I'm talking about here. 1 year spot volume. Look at that. That's been low for a while. You're talking about since the October cleanout, this has been really, really low. And the last time volume was juicy was on the 5th and 6th when we had our last crash-a-roni, you jabronis and jabronas. Throwing it out there. So if clarity keeps getting pushed out, that's bad for us. That's going to keep pushing down spot volume. That's also going to keep pushing down what? Exchanges. It's also going to put down native token. If rates get raised by central banks, which we're hearing a lot of rumors about late summer rate raising, not just United States, like United States might be fourth quarter, but we're talking about other countries out there raising. late summer. That wouldn't be good either because crypto's a risk asset. You want risk to come cheaper. Now, I asked a bunch of you, okay, are you interested in SpaceX? 25% of you said yes, you want some SpaceX action. That's a lot of people of the similar demographic, right, that are into crypto. 1 out of 4 of y'all want to get into SpaceX? Well, if 1 out of 4 of y'all are buying SpaceX, it means you're not using that money to buy what's up on the screen. Quavo Honcho says, gotta go. Will it be possible to watch this live tomorrow? Yes. This live stream is going to go in the live stream folder, the playlist. So as soon as it's done, it gets uploaded there. You can watch it at any time. Thank you for the birthday wishes. We got Philip Ryan hanging out with us in the house. SpaceX poop. I'm not getting into SpaceX. I am not touching that. Not a chance. Not a chance at all. The problem I got with SpaceX is how long is it going to take them to become profitable? And they are making money in different subsectors of their business, but their AI capex, their AI expenditures was just way, way too high. Way too high. And they did just sign a deal. I believe they signed a deal with Google. It was like $920 or $960 million a month. That put a small dent in what their capex was. But remember, they're going to keep building out for a couple of years. So it's going to take some time to recoup that money back. SpaceX, big money grab. A lot of people are saying that they're going to be collecting big on the premiums, and they're going to be collecting big time. Let me just make sure I put this. There we go. They're going to be collecting big time on the premiums, and that you're going to see a lot of volatility with it. And I get it. There might be quite a few people, and then they try to make a quick buck. Look what happened with Gemini's IPO. Sucked. Circle's IPO was good, but then they dumped it, right? They ran it up super fast, and they dumped it. Rockets are expensive. Their space arm does make money. Not much money. Not much money. We got to be fair, okay? Their space arm does make money, just not that much money. Oh, happy birthday. Oh, you know why I'm making a big deal out of my birthday today? It's because I'm probably in the best, cardiovascular shape I've ever been in. I've been stronger than this before, but, overall cardio performance, endurance performance, I can go for, a 4 or 5 hour ride, and it doesn't bother me. I ran a pretty good session of hills before I went live. My legs don't even feel it. I'm getting to the point now where I'm very, very resilient. So super, super happy about that. A lot of you are trying to get some SpaceX, you know? Philip Ryan asked, why the live? Okay, we're talking about regs, okay? And the Clarity Act right now is stuck in the Senate. The problem is, if it passes the Senate, it has to go to the House. Well, the House Ways and Means Committee is going to have a hearing today regarding taxation. Because guess what? If you declare all these assets, securities, commodities, etc., you're going to need a real taxation system for them. We're also going to see if this is one of the things holding it up, that people want tax-free crypto. Maybe they don't. Maybe there's people that we lose votes on because they're like, look, no, we don't like the tax structure. Earlier today, the morning story talked about a new group of people not liking the Clarity Act, and that's the law enforcement. Yeah, law enforcement. So what happened was you now had a couple senators out there say, hey, look, law enforcement isn't cool with this. I'm not fucking cool with it either. So we're going to see if more of this comes up, and that's why we watched the Senate Ag Committee a few months ago live, because the Senate Ag Committee, we learned about what? We learned about ethics. We learned about not having enough people in the CFTC to vote for it. There was only 1 out of 5 people at the CFTC on the voting board. And if CFTC is going to take over crypto regs, how can you regulate it if you don't even have a freaking voting board? That's nuts. So just throwing it out there. Is this going to be painful to watch? I don't think this is going to be painful. I don't think you're going to see the grandstanding in the Ways and Means Committee is bad. They may be a little bit more unorganized, a little bit less polished than the Senate. We're not expecting grandstanding. We're also kind of sitting here waiting if there's something that holds it up, right? If something, there's a few rumors going out that there's some taxation issues that might hold up a few votes. So what's going to happen here is you're going to have a lot of talking, a lot of people going back and forth, and it is going to be fun to see what happens. Let me get a quick drink of my alkaline-based water. Thank you very much. Philip Ryan, that was your summary for you, kind sir, and for everyone else watching and listening right now. They're going to start this at 2 p.m. All right, so it's coming up pretty soon here in about 6 minutes. We're going to see what the crypto market reaction is, because if taxation, okay, what if you get Clarity Act and the taxes suck for it like it does cannabis? Right? Any of my peeps out there watching live in Illinois, you know exactly what I'm talking about. Cannabis, cool, but now you're getting taxed up the beehole. What about all the green stuff that was coming across from Canada to Los Estados Unidos legally? They were getting taxed up the beehole there. So even if we get regs, we have to make sure that the financial part of it benefits us too. What if there's a 30% cap gains tax on crypto gains? Oh, that would suck. So what's Lady Crypto Tarot got to say regarding today's meeting? She's just been right now informative about it, saying like this is the structure, blah blah blah. She hasn't been anything like picking sides one way or another. Not picking sides, but picking opinion points are from people. Let's see. It'll be another repeat about ethics and terrorist funding. Again, that's the other thing too, is Ways and Means with taxation. Is this going to come out with the terrorism stuff like what the police association said? Because that's what the police association said. They were like, yeah, we got some problems here with crypto. So yeah, gonna be doing another look at this, right? Another piece of this so that you all can see exactly what's happening. And to be completely fair, I have told you all that have been watching that if regs did not happen in March, I didn't think we had any chance whatsoever. They keep dangling the carrot, and I don't think that's fair. I think they should deliver. I think the big problem is, though, is a lot of these people know that people will get pissed because they'll feel led on with votes. Because a lot of these people that are voting right now have their votes because of crypto. And that pisses me off. And the SAVE Act, too, is another big problem. The SAVE Act has a lot of public support. Trump said he's not signing anything until the SAVE Act gets saved. Well, we couldn't get the SAVE Act out of the Senate. So, yeah. Joe Ingles says cannabis was legalized just so they can tax it for the government pocket. And that's my point. It's one thing if you get something cool. It's another thing, though, if you get something cool and you have to pay the crap out of it. Deanne, or Dean, I think it's Dean with a lot of N's, I'll say that, says, will you load up on carbs or energy gels to lighten the load closer to race? Right now, I am still in caloric deficit. This race this Saturday, I could do pretty low fueled. I could probably put out like a 6-hour performance on pretty low fuel. Hydration, I have to stay up on, but fuel, I have a lot of reserves that I could run through. I'm pretty good fat adaptive. I've got a pretty good base for that. I'm going to start carb loading on Thursday, very slightly more Friday, and then that's it. Saturday on race day, I eat gummy worms. Seriously, gummy worms. Don't even make fun of me. Gummy worms. You can like let them hang in your mouth, so you could like bite off a piece, chew it, swallow it while the other piece is hanging out in your mouth. You could have a few in your hand right there. Little Ziploc bag so you can pull them out of the Ziploc bag. Gummy frickin' worms. Let's see. So far, I've been paying tax on crypto, and it's not in law. Exactly. That's what we need. We need to get more of these loose ends tied up. And by the way, thank you for the race question. Really appreciate that. Very curious to see how it's going to turn out this Saturday. Let's see. Our state is discussing our eBay tax threshold is $500. I think mine was $2,000. I thought my state was $2,000. Yeah, this stuff is becoming a pain in the butt. I'm doing merch, right? So I'm doing the Hodl I Can mug and the Choo Choo Bitches mug, right? So I'm doing merch. Dude, the taxes are nuts. Like, the taxes are absolutely effing bonkers, man. And the whole thing is, are you getting what you pay for? I'm paying a lot in taxes. I don't think I'm getting a lot for it. My road's not the best. Government, slow. You know, mega infrastructure sucks. You know what I mean. Happy solar return. Love it. Love it. That's right. Another trip around the sun for this guy. And yes, I will be going to Guade, but I will be going to Guade when, everyone? Not in July, but I'm going to go during election season because I have a feeling it's going to be super freaking juicy. So I'm going to be hanging out in the good land, probably watching some Antigua soccer, some Antigua football around then. They're going to be live here in just under 2 minutes. When that happens, I will bring the feed to y'all. I will hang out in the chat, and we will make fun of all these very special people together. If you don't mind, hit that like button. I would greatly appreciate it. And if you don't mind, keep the chat going during this fun hearing. Abby Services says, I paid 37% in tax this year. Yeah, the same. I got hit pretty hard. I did. King VZ, I'm looking right now for Netherlands. I just got good rates for Canada. I got to figure out how I can get good rates for across the pond. I do have your email. Don't worry there. Let's see. I guess I'm just frustrated that this is taking so long. And I think, like, this is kind of teaching me, too, that with crypto, you really got to think about market timing. You really have to think about it more. It's trading differently than stocks. It's definitely different than, like, when you see the upshoots derivative. Like, you see definite different patterns in this. It does follow the calendar of the United States. So when we have our banking holidays, they have banking holidays. Yeah, different demon. I just want to be back in the green. Agreed. I think a lot of us want to be back in the green with this. But that's why you got to diversify, right? That's why I tell you all the time, I know it's boring, but get into boring stuff that pays you money. Trick and I were talking this morning about silver, right? It's another thing. The precious metals, they're boring AF, but, I mean, when they go up and you make good deals on them, money is money, right? Pokemon cards. Don't make fun of me. Pokemon cards, right? I got some chunky Pikachus. Dude, I was just looking at my Pikachu collection. Like, we just were repricing it the last few days. Holy shit, man. Prices are effing nuts on the Pokemon. Like, nuts on the Pokemon. So, like, just be creative out there. Have an open mind. And honestly, look at many things. Try to be diversified. Dean says, yeah, quick sugars and carbs, good idea. I used to run a lot, 4.5 miles every day. I did a lot with Wim Hof breathing technique and yoga. Got good at it. I can meditate while running. Like when I get really, really zoned in, I can meditate while running, and I can actually knock my heart rate down a fair chunk just by breathing very controlled and deeply and finding a cadence that fits. Like I can like knock it down and get really, very relaxed. It's kind of fun. Most of my races though now are super stupid long. The majority of my races now are dumb, stupid long. So I just like that. Like my big one that I'm getting ready for, 24 hours straight of pain in the Georgia heat. Let's see, what else do we got for you? I feel like having an open mind like Cobain. That is a dirty joke. Naughty, naughty boy. Waiting for the house. I know. They're not on time. What a freaking shock, right? Soon as they come in, we'll bring them in the feed-wise. Dave Studdy says, evening, Klaus. Have there been any interviews or ads in regards to the seats that need to be filled before clarity can begin? In terms of the CFTC, no. We have not gotten anything from the CFTC. And I think that's kind of what's scaring me a little bit is the architectural stuff is not being put into place. They're not moving fast. Oh, like, think about it. We just recently got the head of the CFTC confirmed. Just recent. What did it take, like 9 months, 10 months or something like that? That's a long time. So we're not getting stuff done quickly. Like, not at all. R. Schmitz is waiting for Guffman. You know what we're waiting for? We're waiting for results. And unfortunately, I just get the sinking suspicion that it's all going to come down to midterms. I really do. I think it's all going to come down to midterms. On that David Goggins grind class to see Klaus, best of luck with your race and enjoy your celebrations as well. Will you go live for it or anything? I don't know. I think I'm just going to focus on this race just because it's going to be not a faster one. It's going to be like 4 hours long for me, but I'm going to try to like be pushing myself a whole bunch. I might do something during it. I want to make sure I focus on the race because I'm going to do the first part unassisted. I'm going to go there before my crew and I'm going to have all my gear on me for like the first half. So I just want to make sure like I pay attention. I might like do shorts and stuff like that. That'd be kind of cool. Redline Autos and Diesel says tools and guns always go up as well. My old tools I bought new 10 years ago and I got more in trade than what I paid for them. For real. For real, dude. If you buy high quality pews and decent tools, you will make money. Like real tools. Like the real stuff. Well, yeah, good point on that. Norfolk says, Klaus, what do you mean by comes down to midterms for a non-U.S. election? Our presidential election is every 4 years, okay? In between that, we have midterm elections, okay? In our house gets reelected every 2 years, all right? So there's always a group of people, right? Elections, 2 years, 2 years, 2 years, 2 years, 2 years. With the Senate, it's 6 years, and they rotate those through, so it's not always at the same time. So the midterm replaces a whole bunch of seats. And we actually have a whole bunch of seats where people aren't even coming back. I think it's like 64 or 65 seats right now. So yeah, midterms is the election that happens between every presidential election. And I just wanted to say that the House Ways and Means Committee are a little late. Does that surprise you at all that government is a little late? No, it does not. Meanwhile, crypto volume is on the softer side, 89 billion in the last 24 hours. Our favorites kind of beaten up a little bit. And this is even with oil kind of chilling out for a little bit. Amir Davuti says, but it's forecasted that the Dems will win midterm, so I guess crypto is done for a few years. Don't say that. Because one of the people that, Al Green just lost to another Democrat, right, for the primary, just lost to another Democrat who's pro-crypto and was supported by crypto PACs. You do have a lot of people that in the Democratic side that like crypto, they just want certain things before they're going to give their support. They really, really, really want the ethics thing. I think if we were to zoom out and we were to look at yield versus ethics, I think they would have given up on the bank yield for sure if they could guarantee ethics. So don't get me wrong. It doesn't mean it's dead. It makes it harder though, because if the House goes democratically controlled, the House then could block anything that comes through. You just got to pay attention. That's why these midterms are going to be so big. Let's see. Guy Kemp says, Dems are very likely going to take over the House and maybe the Senate, but the regs are still needed. And that's the whole thing. Like, regs are still needed, and you do have Democrats that support it. I think you have to look at it this way, okay? A lot of the Democrats that don't like crypto because of Trump. Trump is not going to be in office 4 years from now. It's going to be someone else. And we still need regs. This is still an asset class that needs some massive, massive amount of guidance here and work. So let's kind of keep that perspective going. It's not that the Democrats hate crypto. They just don't like Trump and they don't like his family involved in crypto. Okay? And he's not always going to be around. Kind of keep that. No, it has not started yet. Louise Muniz says this. I'm late. I was working. What did I miss? Down for a brief breakdown. They haven't even started yet. They are almost 7 minutes late. I donut hole like that. I think that's a whole bunch of crap, if you ask me. I think if you schedule a 2 o'clock meeting, the meeting starts at 2 o'clock. End of story. You're not there in time? Well, you fucked up. You should have been there in time. Should have made it a priority. Let me take a quick swig of my drinkeroni, you jabronis. Water with a little bit of electrolytes. Redline Auto says they'll block it till Trump is gone, then take all the credit for passing it later. Yeah, I mean, it's political strategy, right? I mean, the problem with politics is it's not about making things better anymore. It's more about making the other side look bad. And when that happens, people don't really benefit. I wish both sides would work together, and I wish there was more of a moderate segment on this. Yeah, the docs pay for being late. Doc pay for being late. Yeah, look, okay, let me just make this clear, okay? So y'all know I'm doing the comedy thing, right? And I'm doing it to help improve my presentation with the channel. All is good with that, right? Class starts at 6:30 on Sunday, goes to 9 o'clock. That means from 6:30 to 9 o'clock, you have 100% of my attention, right? Don't start that shit at 6:35. Oh, let's give people time to show up. Fuck no. You start on time. They miss it. Well, guess what? You missed out, homie. You're behind. You have to now pick it up. And don't go overtime either. When you schedule something, schedules are tight because there are some people that have to budget their time out like that. I'm one of those people. Am I a Dwayne Johnson fan? Yeah, I think he's pretty funny. I really do. Carmen says, happy birthday, Klaus. Birthday luck for crypto to pass would be a plus. Thank you. Let's see. I'm frustrated because they still haven't fired it up yet. In case you haven't seen. Yeah, I mean, I guess you guys are on time. No, not at all. So, yeah, way to go by the House and Means Committee for not being on time. But for real, that's just my one rule about being in time. Just, if you have something scheduled, be on time. Let's see, Tina Philly says, I told y'all I have little faith in Clarity passing. My thing with Clarity was March. You know what I mean? Finally March. Like, if March it didn't pass, I think that was it for us. That was for me, that was my deadline. Louise says, you're finally 21. When are we going to get drinks and celebrate? No drinking during training season. That's a little bit different. Drinking is bad for you when you're training. Now, other things, not so bad for you. In fact, they kind of help you sleep. But drinking, oh, not the best for you. Philip says American politicians are a pack of ball bags. I agree. They've been at this for nearly a year. They have. Remember, the House passed this last year in July. We're almost at a year. Just throwing it out there. We're almost at a year, and we're still dealing with this. Colby Manning says, if you're not 15 minutes early, you're late. Yeah, exactly. You know, if you've got something scheduled, you launch it on time. You have to respect other people's time, and you have to respect scheduling. I heavily believe into that. That's why this kind of stuff pisses me off, because, like, look, if you guys, not you, but the Congress people, if y'all were going to show up fucking 10, 15 minutes late, I could have gone running for 10 or 15 minutes more. Like, I cut my stuff short so I could be ready for the live stream, and y'all ain't even ready for it. So, yeah, there's that. So until the House Ways and Means Committee hangs out with us, I guess you're stuck with this guy. Sorry. Oh, gosh. I don't know. It's just frustrating. And this is part of what the problem is, right? Is we're not getting stuff done. What about the government shutdown? Right? What was that? 43, 44, 45 days or something stupid like that? That we were in a shutdown? Like, we don't need these kind of problems. We have to be getting away from this kind of stuff. This is what's causing damage. This is what's causing massive amounts of financial damage. Because all waiting does is screw people over. And here we are, waiting on the House. 2 hours, 11 minutes. So it's 2:11. They are 11 minutes frickin' late. Let's see. Norfolk says there's only 200 people watching the live there. Very true. And you have 450 there. Yeah, that's true. There are double the people watching the government through this stream than through theirs. That's because they're stupid and they're not on time and they turn off their comments and all that kind of shit. And I let it throw. Tyrant says until their paychecks are held back when it comes to pass laws, they will always take their time and procrastinate to do so. Yeah, it's just we're not getting effectiveness from government. And that went on with our taxation conversation that we had earlier. No one minds taxes if you get shit for it. Just throwing it out there. If you get shit for it. Right? No one minds that at all. But when you get taxed hard and you don't get shit for it, that's when things suck. A little bit of ice and fire. I might have to do some ice and fire. Mark Sargent says, happy birthday. Thank you very much, Mark. I greatly appreciate it for you. If I get done with this stream early enough, I might go out for a second training session today because I cut my first one a little short so that I could be ready for someone who's late. Not you, the politicians. Schmidt says this, riff tracks with Klaus is the best. Well, you know, we're just kind of ripping it off right now. Carmen says we get rags, then we get paid and laid. Perfect. Yeah, we need regs. Yeah, if we get regs, we get paid to get laid. Very true. Also, if you do dividends. STRC's getting a little scary right now. Circle, a little scary too. I don't know if y'all have been paying attention to Circle as of late. That has been one. Let me put this up here. So if they come on, I can hear them. Circle's been a little bit touchy here. Let's do this. I want to bring up a couple of them, and you're going to see exactly what I'm talking about. Gold's still selling off a little bit, still above 4,000. I get that. Gemini's been taking a rough one here. That has definitely been a rough one. But the dividends, we talked about STRC, all right? Let's bring up STRC. Not at par yet. That's been a while there, kiddos. Just throwing it out there. Let's zoom that out. Yeah, they're trying to keep it at that $100 mark consistently. So this is a tough stretch right here. Let's see. It's the proverbial reach around. No, that's the problem. This isn't the reach around. This is the you get bent over by Congress and they don't even give you the reachy aroundy. They just said it will begin shortly. For real? Y'all are 15 minutes late. Brad Garling Mansion. Love the name, by the way, dude. Says late employees get fired, late politicians get a raise. Totally. This is shit. Turpy says, brother, you're a legend. Happy birthday and hope your race goes well the weekend. Yeah, I think we should be good this weekend. I really do. I think I'll do okay this weekend. I'm not like doing a full taper where like I chill the F out. I'm still training this week. I'm just not training as much volume. The intensity is still there. I'm going to ride tomorrow, maybe chill Friday or a light ride Friday. I don't know. I'm hanging out. I'm doing good. The race will be fun this weekend. It's just the humidity that's not. Humidity is going to be a brutal beast, man. Brutal beast. Let's see. Kramer said that Bitcoin will crash, so I think we're good. You know, the whole Bitcoin thing, that's rough, man. That's rough. It does not look good. Larry Barron says, happy birthday, Mr. Klaus. I'll puff one off for you, bro. I appreciate it. Dude, Bitcoin at 61,000 puts a lot of pressure on Sailor and STRC. What people have to understand, too, it's not just the fact that he had to sell 32 BTC, because that's not that many, right? Dude buys shit tons at a time. It's the fact that for 1 week, he couldn't buy. He had to sell. And I want you to think about that. Do a week without a paycheck where you have to put money out instead of getting money in. Do it a week again. It's just those are opportunities missed. And that means he's missing out on big chunks of BTC at 61,000, which is way below his average. See, that's what you got to start thinking about. So it's not just him spending a little bit of BTC to pay off some bills, but it's the opportunity cost being lost to buy an asset that he believes in cheaper than his average. Ways and Means will begin shortly. They're only 17 minutes late. Sorry about this, everyone. How's the pups? The pups are doing good. Lucas is still a little miffed. Ever since he had the interaction with the other dog, he's been a little weird. He's a little, like, skittish, too. So that's a little hard with little Poopas. Let's see. I think the fact that they're so late is foreshadowing how this meeting is going to go. Yeah, that might be indicative. Like, either they're dealing with other stuff right now, or there's stuff that's coming up that they are not happy about at the moment. Patrick O'Neill has been getting back into running and weightlifting. But every time I start just a little, I wake up with part of my back seized up. First it was my lower back, now it's my upper spine. Here is what you do, Patrick. Do as much as you can so where the next day you wake up good to do something. Because if you wake up the next day and you can't do something, then that day's wasted, right? Especially in the beginning. Just do enough so that you're able to recover the next day. And then do the same thing. Do enough to recover for the next day. Do enough, but not too much so you can't recover for the next day. No, you want to train hard enough to recover the next day. So that, and this is just in the beginning. When you get more deep into stuff, that's when you can train and give yourself, multiple day soreness and whatnot. But in the beginning, if you're waking up stiff and all that, work on your mobility, work on just moving, right? If the weight training's bugging you, just pick a few light exercises that do like whole body stuff. Just get your body moving. Kettlebells. And if all of a sudden you can find out things that bug you, you can isolate those things and not do them and attack the muscles from other things. But what do you got to do first? You got to make sure your body can move first. Poop Sandwich is right because they're only 18, 19 minutes late. Wildcat on 3 says 17 minutes late because our time isn't as important as them. Vote these tards out. I totally agree. Totally agree. Crypto Turtle says being down 10 billion on BTC is crazy. Yeah, it is rough with Sailor. And that's the thing. This is another example of how governments are not on time. Governments don't act the right way. There is no business meeting that I have ever been to where we would sit there with our in our hands for fucking 19 minutes waiting for it to start. That would never, ever effing happen. We started on time. And if you were late, you were late. You had to figure out a way to make it up. This whole 17 minutes, come on now. Let me take another drink here real quick. Give my voice a little break-a-roni, you jabronis. Okay, let's talk about this. Tyron brought up a good point, and I'm going to bring up something that's going to be tough for a lot of y'all to understand, but it's the truth and it's nasty, and this is very true in the United States. Tyron says this: it's a win-win for Sailor even if MSTR fails. He'll still own Bitcoin, but retail MSTR holdings will go to $0 or $30. The thing is, if the company goes under, he has to liquidate his holdings. The sad part, the real sad part, is he gets paid a shit ton of salary and will get huge bonuses even if the company goes under. He's making tons of money right now as the company is losing money. That is horrible. The sad part about all of these things is all these CEOs of these companies that are getting paid big kid money while their companies are losing. That's what's nasty. That is really, really bad. So think about that. And I got to stop using that phrase today, but I've been saying that a lot lately because I've been trying to zoom out as much as I can. But the truth is these people are late. Par for the course. I did not see what happened in Belfast today. I literally have done no TV, no social media, no stuff like that. I have been training my booty off and packing up merch and all that kind of fun stuff. So just throwing that out there. Still waiting for him. Ways and Means Committee. It said it'll begin shortly. I don't know about you, but yeah. Leslie Mole says this: I will be honest, if America doesn't do this crypto thing and China beats you to the post, we'll serve you right over here. You've had to lose a chance. But the thing is this, with China, United States still is a big money market. And anytime a big money market enters something, that's a big oomph to that market. So even if we can't get the regs right away, if we get the regs, say, in a year, that will bring money in a year later. And that's the whole thing. I think people have to understand is we didn't have any regaronis for crypto for a long time. In fact, we still technically don't. We didn't have regaronis for crypto, and BTC got up to $120,000. We didn't have regaronis with crypto, and during the Gensler era, BTC was at $16,000 to $30,000. So, do we need regs? Yeah, we eventually need regs. But we've also seen the market grow in speculation leading up to regs. So yeah, China gets their stuff done first. Awesome. It doesn't mean then the U.S. just falls off a cliff and is irrelevant. The U.S. could show up late, just like they do in these effing meetings, and it'll command market change.
Let's see. Technical difficulties. Please stay tuned. Yeah, it's just this is frustrating for me. And this is not negative to y'all. I think y'all are amazing people. Obviously, you see on my birthday, I'm doing a live stream instead of effing around. But, like, I seriously did cut my run short so I could be ready for this. And here we are 23 minutes later, and they still don't have it. Tyron says the market will go sideways because it will be the same old shit, rinse and repeat verbiage. Yeah, we've seen this before. We've seen this a time or two. We saw this with the Genius Act. For those who've been following the channel for a long time, we saw that with the Genius Act. JOX7007 says, what are the benefits of Clarity Act even going to be? Honestly, it's going to be, the biggest one is companies are going to be more comfortable doing stuff with these products, doing stuff with these coins. Right now, there is no real clarity. So, like, if a company is like, hey, we want to build a BTC ETH strategy, those two have the golden pass. They have the golden pass. Everything else is kind of in this, like, weird limbo space. Even XRP with Torres. There's a lot of players that aren't adding XRP to their books right now because it doesn't have a law giving it clarity. Not a judge's ruling, but a law. See, a law supersedes that. So part of the issue is that without these laws, you could own a bunch of BNB as a company, and then the next president could come in and be like, nah, we're going to ban crypto. We're anti-crypto now. And then you're a company that just bought a whole bunch of something that you can't do anything with because now it's banned. A lot of companies are playing that conservatively. There are very, very, very few companies that own digital asset treasuries. Very few companies. We talk about, like our strategies, Metaplanet, Bitmine, all those, right? But when you zoom out, that's only a couple of them in this big blobberoni you jabronis. So the effect is still very small because companies don't feel comfortable buying crypto, doing anything with it because there's no real laws behind on it. Let's see. Joe Ingle says stock market going blockchain should help some utility coins, right? No. And here's why. DeFi Llama, okay? We're going to look at DeFi Llama, all right? Fees, revenue. XRP only made $350 in chain fees the last 24 hours. What the hell are you going to do with that? That's not any gas pressure. Like that, there's no transactional pressure for that. Let's see if we can get another one up here. Look at how much did Stellar's chain make? In the last 24 hours, they made $1,100. That's not bad, but you're still not going to get rich off of only burning $1,100 when the circulating supply for XLM is going to be 50 billion coins. That's crazy. Manuel Perez says, even after clarity, true price discovery will not come. Mass adoption takes time. It's not just that mass adoption takes time, but what have any of these crypto players built that a lot of people are into? Tokenization, yes, but you have to be into that individualized tokenized thing. But what have they built? Like, has there been any player on this crypto heat map right here that has built a product where you are like, oh my gosh, I use this every day? Like, I'm not being mean. I still use my debit card every day. Do you know why I use my debit card every day? Because everyone freaking takes it. Because the money that I have in there is stable. Crypto is not stable and not everyone takes it. So we need something else. We need something more than payments narrative for crypto to move. Stable coins are doing payments. Crypto's not. We need that narrative for adoption. Yeah, I gotta pay attention to what happened with Belfast. I did not hear about that. Like I said, I haven't paid attention to anything in the news today at all. I've been totally busy just since the beginning of this morning. So, utility is what? I mean, and think about it. Even the utility tokens, how do they benefit from it? There's no burn rate. $1,100 in fees is nothing. You do not understand the math if you haven't done it. XLM price right now is what? 19 cents. There are going to be 50 billion in circulation, right? And you want to multiply that times 19 cents. That's 9.5 billion. And what is our burn rate every day right now, kids? $1,158 in fees is being burned. So let's go to our calculator, divide that by 1,158 just to get... That's fucking 8 million days. 8 million days, 8.2 million days at this rate, it's going to eat itself up. That's what I'm saying. Do you know how long it's going to fucking take to really have any effect? It's like we're way past like our great grandkids. Thank you for the happy birthday wishes. I appreciate that. Let's see. 007 coming back says Iran was slamming the back door out of Israel last night. Yeah, that's not slowing down either. It's at least chilling out the prices of oil. Oil right now is sitting at $88.25. So that's down at least a little bit. But yo, that's still painful. Still painful if that keeps going on. Let's see. Clarity Act passing in 2026. My belief is no. My belief is I don't think so. I don't think Clarity had a chance since March. And just putting it out there to y'all, we're still waiting for the House. They're only, what, 20? Hold on, let me see. They're only 30 minutes freaking late. Baller4416 says, how do you see the XRP information on DeFi Llama? Up on the top, their search bar. Click it in their search bar. You'll see it right up on the top here. Pick by chains. You can put XRPL, and you'll see it pop up. See, XRPL, $350 in fees. So you're not making money on the chain, and that's just what people have to understand. You're also not making money on the stable coins on the chain. Those two things don't have any correlation whatsoever. Let's see. How are futures going down when our reserve tanks are getting critically low? Oil futures are going down because a lot of people are thinking that this is just going to ease itself on. The thing with the Strait of Hormuz is that there are players building pipelines to bypass the Strait of Hormuz so that we don't have to worry about shipping through there anymore. Once those pipelines are built, that eases a whole bunch of pressure in that region. Some of these pipelines are going to be done in the next 9 to 12 months. That the market, when they see good news coming out that soon, that's going to help them out a lot. 818 MacGyver says, why does the system seem so broken? I feel like they're just messing with the people and it's all a horse and pony show. Because it is. It's we get screwed around a lot. We get taken advantage of as the taxpayer. We have politicians that don't really have accountability. I mean, what did the one lady embezzle like $6 million and she was pissed? She was like, yeah, okay, screw y'all. I mean, we do. We just live in a society right now where corruption and greed are a little too frequent. It's just a little too frequent. Pipelines. Yeah, I've got pipeline fans in the house. I lived in South Dakota when they were doing the pipelines. And I remember I was hunting season. And you could see where they were doing it. It was really cool. Like, you could see it, like, out in the distance in the fields. It was cool. Other than that, we're waiting for the House Ways and Means Committee to show up. I mean, right now it's 32 minutes late. I mean, I don't know what to tell you. I mean, just putting that out there. No, I don't have the video paused. This is the House taking their time. 32 minutes late, you know. We have to show up on time for our jobs. They apparently don't have to show up on time for theirs. So I've been just throwing this on in the background in case I miss it. We've been talking circle back well under $100. A little pumperoni and dumperoni in crypto. We saw that move from February. Push circle from $50 up to 130. Pushed it back on down to 85. Moving back on down now even more. 81.56. Let's see. Fort Chief says thoughts on Hyperliquid down the road with other exchanges getting in on the action. Exchange tokens, I believe, will heavily benefit with Clarity Act Because who does that benefit? The exchanges. More people are going to feel comfortable trading crypto. More people are going to feel comfortable once there are laws regarding something. That you have to think. You and I are risky, okay? You and I are into something that does not have true regulations, true regs. Gray market shit. I don't know what the hell you want to call it, but it's the truth, right? We're into something that does not have a formal classification or status with the government. That is just something that we're okay with. We took that risk. We're the minority, and I mean the minority, right? Most players out there don't want to touch something until it's legal. A lot of people too, and let's be fair with each other, a lot of people too got burned when? They got burned with all the meme coin launchpad crashes. They got burned with all the rug pulls, the hack scams and schemes. So we've lost quite a few people along the way too because of some problems with our own ecosystem. What about all the bridge exploits, all the hacks and stuff like that? That's not good for us. So these are all things that we have to work through. Dexter Biggs, so sorry ain't wait no more. Have a good one. Yeah, this is getting a little annoying. I'm just frustrated because this is just more of what the government does. Here's a good one. Prediction markets are unregulated markets. Thank you for that one. That's another good point. What about people with prediction markets? Right? Those really don't have the same regs. They've got some like bullet points to them, but what's that do? That doesn't do anything. So prediction markets, that's another really good example. Silly Sam dropping support on the channel from South Africa says, happy birthday, Klaus. You need a bribe, which is a big South African barbecue. There's some accent. The only thing that I can say my South African accent is because I watch Global Triathlon Network is when he says his Coben Rudbach. It's like the Rudbach. That's how he says it, like Coben Rudbach. Thank you, Silly Sam, and everyone. Give Silly Sam some thank yous for dropping some South African minis on the channel. That's where Sam is watching from. R. Schmitz says, can't wait for the mugs. Well, guess what, kind sir? A whole ton have been shipped. I think I've shipped out 20, 21, 22 orders, something like that. I'm going to do more tomorrow. I'm going to give myself a little bit of a break because I already did a whole bunch today. A whole bunch of mugs are on the way. And yeah, we get taxed on it. And that's true. We get taxed on something we don't really have regs yet. We don't really know what's going on with prediction markets. I mean, this is just a pretty big, messy mess. Let's do this. I am going to put Ice and Fire on. When they come on and talk, I'll kill that. Put that in. What do y'all think? Or should we keep going? You tell me. Should we keep going? Or should I just do a little Ice and Fire and chill out for a little bit? Come back when these peeps come back. Let me know. Let me know in the comments. I want to hear. In the meantime, I'm going to take a little drink of water. Plowing down my water. Yeah, the tax stamp. That's what I'm saying, man. You know what I'm talking about. It's the tax stamp. Norfolk says, hey, 5-minute chill time. Make or brew. That's not a bad idea. Bry sounds great. I don't know if I'm saying that right. Yes, I do believe prediction market should be regulated. R. Schmidt says 5 more minutes than bail. If you need Ice and Fire to pop and do stuff. No, the thing is what I want to do is I don't want to kill the stream and then have to build a whole new one just for them. I could always just put music on and chill. You know what I mean? Let the music loop and just kind of give this a listen-a-roni and see what's going. Get us your mugs later. Take today and chill. Dude, I already shipped out a whole bunch, man. I got up early today. I told you. I love this stuff. I love being busy, and I just love, I don't know, I just like being productive. It's why I like the whole ultra running and ultra cycling thing. It keeps me nice and productive. 48% chance right now for Clarity X, so we're kind of bouncing around all over the place. Volume for the crypto market a little soft though at 89 billion. We're still waiting for Congress to come. Ugh, what's going on with them? Cherry gelato is the flavor of the day. Lemon cherry gelato. Holy crap, man. Yeah. Skittles was like one that was on the market a couple of years ago. That's all you heard about was Skittles. You don't hear about it so much anymore. Skittles and Runts. Skittles and Runts. Those were the two. Watch Lethal Weapon one to learn one. Yeah, I know. I have to get better at the South African accent. I'm getting better at some of my other ones, but my South African one is let's see. Lauren's hanging out with us. We are due for some good news. I would totally agree, and I wish the good news would come with these peeps. So let's do this. I'm going to play some music, right? Give myself a break. I'm going to keep this feed on. When they start talking, I will kill the music, hop on and all that stuff. Sound good? All right, cool. Let's do that.
You're chilling in the rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Baby, you give me ice and fire. You're channeling wind and rain. You're some kind of butterfly. My appetite. Don't leave me here high and dry. Oh, 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 You're channeling wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Baby, you give me ice and fire. You're channeling wind and rain.
committee will come to order. Today marks the first legislative hearing in this committee in years, which highlights the importance and complexity of digital asset taxation. The digital asset status quo is untenable. America needs clear tax rules of the road to remain the crypto capital of the world. Recent data indicate that a quarter of Americans, or over 67 million people, own cryptocurrency. That's a dramatic increase from only 3% at the start of this decade. Nearly a quarter of cryptocurrency holders earn less than $75,000. And the average crypto holder is nearly as likely to work in construction, manufacturing, or food service as tech or finance. Crypto owners live in every community, urban, rural, and everywhere in between. Today, cryptocurrency has a market capitalization of over $2 trillion. That's a massive industry by any measure, and nearly all other industries of a similar size enjoy clear tax policies. The days of debating whether digital assets are a passing fad are gone. Continuing their current growth, digital assets will only become further integrated into the economy. Americans need simplicity and clarity to own, trade, and use digital assets with confidence. Digital asset businesses, many of which are homegrown American innovations, need consistent rules tailored to digital assets. Our committee's work has identified 3 key gaps in the current tax regime that make it harder for Americans to fully participate in the digital asset ecosystem. First, common digital asset transactions, like mining and staking, do not fit clearly into existing tax law. In other places, the tax code is silent as to the treatment of digital assets. The ambiguity creates an opening for taxpayers to exploit the law and avoid paying tax in some circumstances, and creates unfair tax burdens in others. Second, digital assets do not receive the tax benefits nor the protection from anti-abuse rules long granted to traditional financial assets. The imbalance between digital assets and traditional financial assets creates a 2-tier system that unintentionally favors certain assets over others. Third, crypto owners face burdensome tax compliance that makes using digital assets in ordinary commerce almost impossible. 31% of crypto owners would like to buy a cup of coffee at the local shop. Yet, each $5 cup of coffee bought with a digital asset generates 2 new pieces of tax paperwork. As a result, the IRS gets hundreds of millions of such tax forms each year, called 1099 DAs, that do little more than burden taxpayers. The Ways and Means Committee engaged in months of thoughtful discussion to build a lasting framework for digital asset taxation. The 8 bills and discussion drafts we are examining today offer solutions to major challenges of clarity, parity, and administration of the tax code. The first bill we will examine lowers the tax burden on ordinary digital asset owners by excluding the small amount of gain or loss from tax reporting when a digital asset is used to pay network fees, like when checking out at the grocery store using crypto. This bill from Representative Rudy Yocum extends the same exclusion of gain or loss for minor fluctuations in regulated US dollar stablecoins. Mr. Yocum's bill also grants taxpayers who frequently use certain digital assets the flexibility to choose to provide one combined annual income calculation for digital assets, instead of calculating gain or loss on each individual transaction. Together, these policies dramatically reduce the burdensome reporting currently required of taxpayers. The second bill introduced by Representative Mike Carey clarifies the tax treatment of mining and staking rewards by treating them as ordinary income, but also allows miners and stakers to treat this income like self-created property, depending on which method best matches the timing and character of the rewards. The bill also provides a safe harbor for exchange-traded digital asset funds to receive staking rewards, which boosts the returns for Americans invested in these financial products. The next bill ensures that traditional financial assets and digital assets receive similar tax treatment. Legislation from Tax Subcommittee Chairman Mike Kelly removes the requirement that charitable donations of widely traded digital assets undergo a qualified appraisal in order to claim a charitable tax deduction. By doing so, this bill applies the same treatment to digital asset donations that already applies to stocks that are traded on an established stock exchange. Legislation from Congressman David Kustoff extends tax benefits available for traditional assets to digital assets. Our financial markets rely on these benefits to encourage foreign investment and improve liquidity. Under this bill, digital assets would be covered by the Securities Lending Safe Harbor, the Securities Trading Safe Harbor, and a special method of accounting for dealers and traders. Our hearing will also examine the application of long-standing anti-abuse rules to digital assets. These rules protect the integrity of tax filing and prevent bad actors from taking advantage of the tax code. Legislation from Representative Jody Arrington extends anti-abuse rules to digital assets so that the tax code treats investors in digital assets the same as other investors. The current landscape of vague laws paired with a high compliance burden make taxpayers fearful of correcting previous mistakes. Legislation offered by Representative Aaron Bean creates a limited one-time disclosure program for taxpayers to voluntarily come into compliance for past digital asset tax filings. This bill does not eliminate the interest on back due tax or the tax itself, but it does provide a simplified way to correct mistakes and reduces penalties for taxpayers who want a clean slate. We will also examine a discussion draft that ends a complicated scheme where taxpayers establish residency in a territory and then take advantage of complicated regulations to avoid paying capital gains tax on digital assets. Digital asset taxation does not have to turn into a partisan fight. I want to note the leadership of Congressman Miller and Congressman Horsford in showing digital asset taxation can be addressed in a bipartisan way. Representative Horsford has brought forth a discussion draft that looks at issues regarding mining and staking rewards and the charitable deduction. Other countries like Singapore and Switzerland have already implemented comprehensive tax regimes that offer clarity to digital asset owners. Congress must act now and enact clear tax rules to ensure America remains the global leader in digital assets. If Americans want to pay with a stablecoin instead of a credit card or cash, they should be able to without a pile of tax paperwork. If a hairdresser, a gig worker, or a small business owner wants to accept digital assets as payment, they should not be treated any worse from a tax perspective than payment in cash or credit. Our tax system should not be picking the winners and losers. That is why these bills focus on removing the tax advantages and disadvantages for Americans who use digital assets. I want to thank our expert witnesses for being here, and I look forward to our discussion today. I'm pleased to recognize the ranking member, Mr. Neal, for his opening statement.
Thank you, Chairman, and thanks to our witnesses for being with us this afternoon. We are here to address the taxation of digital assets, which have taken quite a bit of the committee's time this year. In light of many of the struggles that are taking place for the American family, I hope that we will also be able to devote more time to the price of gas, groceries, energy, housing, and health care, which continue to soar, and we want to be involved in finding solutions to those problems as well. Notwithstanding that observation, I'm glad to see that the majority is holding this legislative hearing. We're wading into a novel topic with a degree of caution, which is an important consideration. If there is one thing that I can say that is bipartisan for sure, it's the need for more education on this topic of digital assets on both sides of the aisle. One of the most important questions that face all of us is the level of risk and who eventually will underwrite it. We have before us 6 bills and a discussion draft, and my initial observation is that there are some aspects of these bills that are quite sensible, providing clear rules of the road for taxpayers looking to comply with the law. Other provisions sought the common sense goal of alleviating burdensome paperwork requirements, especially in situations where it's highly unlikely that there would be any tax associated with those transactions. And indeed, there are provisions that would close loopholes that are specific to the digital asset industry, another goal that I think we all share. At the same time, it appears there are some provisions that deviate substantially from general tax principles, providing a distinct advantage that are beyond some other investments. We want to be careful about putting a thumb on the scale, and as we all know, it's much easier to put something into the tax code than it is to take it out. I hope that we will consider building the necessary buffer as it relates to the element of risk that I highlighted just a moment ago. Mr. Chairman, you've stated that the goal here is to have a strong bipartisan piece of legislation. I'm aligned with that goal eventually. There's healthy skepticism on both sides, as evidenced by the fact that there are still large numbers of Congress members who don't comprehend all of the questions that we are currently discussing. Let me also single out Stephen Horsford, who's been a leader on our side, and he's been quite engaged in these negotiations. This hearing's a good step. My suggestion is that we listen carefully to our witnesses and bring up many of the various concerns on all and both sides of the questions and across the aisle. There is only one way to truly develop a bipartisan product, and that is to hear what has to be said, but also understanding the role, as I have mentioned twice already, where risk might take us. Thank you, Chairman.
Thank you, Ranking Member. I will now introduce our witnesses. Ms. Sarah Riley is Vice President and Senior Tax Counsel for Fidelity Investments. We have Mr. Lawrence Slotkin is Vice President of Tax for Coinbase. We have Mr. Jason Somansato is the Director of Policy for Coin Center, and Mike Kircher is Deputy Director for the Tax Law Center at NYU Law. Thank you, each and every one of you, for joining us today. Your written statements will be made part of the hearing record, and you each have 5 minutes to deliver remarks. Ms. Riley, you may begin when you're ready.
Chairman Smith, Ranking Member Neal, and members of the committee, thank you for the opportunity to testify today on the need for digital asset tax legislation. My name is Sarah Riley, and I'm a Vice President and Senior Tax Counsel at Fidelity Investments based in Boston, Massachusetts. I'm an attorney in the corporate tax group focused exclusively on digital asset tax issues. Thank you to the committee for its leadership, diligence, and foresight in undertaking the complex task of crafting tax legislation to bring much-needed clarity and certainty to the digital asset ecosystem. I appreciate having had the opportunity to work directly with many members on the committee and their dedicated staff over the past year. Your time and focus on these issues has been extraordinary. And thank you for the opportunity to appear before you today and to share Fidelity's perspective on digital assets and the importance of implementing a modernized tax framework. If enacted, the proposed legislation would remove tax-related barriers to U.S. innovation and competitiveness in the digital asset space, allowing for blockchain technology to flourish in the United States. For over 80 years, Fidelity has been focused on helping our customers invest and build financial security. Today, we serve millions of investors across retirement, brokerage, and workplace benefits with $7 trillion in assets under management. Fidelity offers unique perspectives in the digital asset space. As one of the only established large financial institutions actively involved in the digital asset ecosystem, we are a bridge between traditional finance and digital assets. Fidelity has been engaged in the digital asset space for more than a decade. We began research and development on digital assets in 2014 and have supported customers' access to digital assets across institutional and retail channels since 2018. Fidelity now supports customers with respect to digital assets across custody, trading, retirement accounts, exchange-traded products, payment stablecoins, and blockchain research. That experience gives us a well-informed view of where existing tax rules map well to digital assets, where they do not, and where legislative clarification is needed. As digital assets play an increasingly important role in the U.S. financial system and broader economy, the tax code must be modernized to provide taxpayers with clear, consistent, and administrable rules. Although the impact of tax uncertainty may have once been viewed as affecting primarily crypto-native market participants, the increasing use of blockchain technology in traditional finance has expanded its relevance. As a result, the lack of tax clarity affects not only those directly involved in the crypto space, but also the financial sector at large. For example, tokenized securities and payment stablecoins all run on blockchain. Most tax code provisions that could potentially apply to digital assets were written before the broad adoption of, and therefore without contemplating digital assets, and the limited amount of sub-regulatory guidance addressing digital assets has proved wildly inadequate. General tax principles are a useful starting point, but cannot address the full scope of new challenges and complexities introduced by digital assets, including how to accommodate the broad range of use cases. Clear and administrable tax rules consistent with existing tax principles are needed to address issues that are unique to digital assets and blockchain technology, such as timing, character, and sourcing of validation activity and rewards, and the tax treatment and reporting of payment stablecoins, and areas where digital assets are similar to traditional investment assets but face disparate treatment, such as in the context of U.S. securities and commodities trading safe harbors, mark-to-market accounting, and non-recognition treatment for securities lending transactions. Absent legislative action, tax uncertainty has real and harmful consequences. It undermines taxpayer confidence and exposes taxpayers to unnecessary risk. It can produce inconsistent taxpayer outcomes and create opportunities for more sophisticated taxpayers to take aggressive positions. It makes compliance more challenging, particularly for those without access to specialized tax advisors, and it incentivizes the offshoring of innovation and infrastructure, impairing U.S. competitiveness. On behalf of Fidelity and the millions of customers we serve, we appreciate the invitation to share our views and contribute to this important dialogue. We commend the tremendous work of the committee in putting forth a tax framework that would address key areas of uncertainty in the digital asset space and provide a critical and much-needed foundation for taxpayers while balancing the priorities of clarity, parity, and administrability. We look forward to continuing to work with the committee to implement a modernized tax framework for digital assets. Thank you.
Thank you, Mr. Slotkin. You may begin when you're ready.
Chairman Smith, Ranking Member Neal, and distinguished members of the committee, thank you for the opportunity to testify today. My name is Lauren Slatkin. I serve as the Vice President of Tax at Coinbase. Before joining Coinbase, I spent nearly 25 years as a corporate tax executive at General Electric. During that time, I learned a simple lesson that applies to every market, every taxpayer, and every industry. When tax rules are clear, people comply. When they're unclear, complexity grows, costs rise, and economic activity moves elsewhere. That principle is especially important for digital assets. Today, millions of Americans own or use digital assets, yet much of the tax code still treats this technology as though it were a niche experiment rather than a growing part of the financial system. The result has been confusion for taxpayers, compliance challenges for businesses, and unnecessary burdens for the IRS. I want to commend Chairman Smith, Ranking Member Neal, the members of this committee, and the bipartisan staff who have spent years working through these issues. The legislative bills before the committee represent the most comprehensive effort to modernize digital asset taxation that we have seen to date. Most importantly, this legislation recognizes a fundamental reality. Market structure and tax policy go hand in hand. Market structure sets the rules of the road. Tax policy determines whether Americans actually choose to use that road. The Clarity Act is moving through the Senate, but this committee shouldn't wait on the tax side. Clear tax rules will strengthen the emerging market structure framework, and further delay only pushes activity, capital, and innovation offshore. The legislation contains several important highlights. First, it brings common sense treatment to payment stablecoins. Genius Act-compliant stablecoins maintain a one-to-one relationship with the US dollar, requiring taxpayers and the IRS to track gains and losses on transactions that generally produce little or no economic gain creates significant administrative burdens without meaningful tax revenue. The deemed basis framework included in Congressman Yakim's bill is an important step forward towards making stablecoin payments practical while reducing unnecessary reporting noise. Second, the legislation recognizes the unique mechanics of blockchain networks by providing relief of small validation and network fees. Every blockchain transaction requires these automated infrastructure costs. Treating every small network fee as a taxable event creates complexity far out of proportion to any revenue impact. The committee's approach is a meaningful step toward aligning tax rules with how technology actually functions. Third, Congressman Kerry's bill provides long-needed clarity for mining and staking rewards, helping ensure taxpayers are not forced into tax obligations before they've generated liquidity through an actual sale. This improves administrability while supporting domestic investment blockchain infrastructure. Finally, we appreciate the committee's discussion to pair taxpayer relief with market integrity measures, including wash sale and constructive sale rules, while providing a reasonable implementation period for brokers. While we strongly support the direction of the legislation, we believe several targeted improvements would strengthen the final product. First, Congress should go further by establishing a personal transaction de minimis exemption for all digital assets, including Bitcoin. Congressman Yakim's bill removes tax friction on network fees, but a consumer who uses Bitcoin to buy a pair of jeans still has to calculate and report a capital gain. That's not good tax policy. Americans shouldn't need an accountant to buy jeans, and the IRS doesn't benefit from tracking millions of transactions that generate little or no revenue. Second, Congress should ensure that any future international reporting requirements are carefully coordinated with existing U.S. reporting frameworks so that American businesses are not subjected to duplicative and conflicting compliance regimes. Mr. Chairman, the legislation before the committee demonstrates that we do not have to choose between strong tax compliance and technological innovation. We can achieve both. By modernizing the tax treatment of digital assets, Congress has an opportunity to provide certainty for taxpayers, reduce administrative burdens, strengthen compliance, and reinforce America's leadership in the next generation of financial infrastructure. I believe the bills before us are a vital step toward that goal. Thank you for the opportunity to testify today. I look forward to your questions.
Thank you. Mr. Somensato, you may begin.
Chairman Smith, Ranking Member Neal, and members of the committee, I thank you for the opportunity to testify today. My name is Jason Somensato, and I am the Director of Policy at Coin Center, a nonprofit focused on cryptocurrency and public blockchain policy. For several years, former Secretary of Defense Donald Rumsfeld sent the IRS a letter with his tax returns. The 2014 version read, "As in prior years, I have absolutely no idea whether our tax returns and tax payments are accurate." This is amazing because I doubt Secretary Rumsfeld even used Bitcoin. Taxes are already complex. Crypto tax compliance is even harder, in part because our tax system assumes that most financial activity runs through intermediaries that can track, summarize, and report transactions for their customers. That assumption may work tolerably well when the people use banks, brokers, and payment processors. It breaks down when Americans use open cryptocurrency networks that were designed to allow users to transact directly with each other. That is the core problem before the committee. A tax system should collect what it is owed, but it should not require Americans to give up the freedom to use open networks simply to make tax compliance practical. The current reality is that crypto users are expected to maintain detailed records of virtually every transaction, track changing market values, determine the tax treatment of very complex activities, and calculate gains or losses on transactions that may be only worth a few dollars. What often feels like sending a simple electronic payment, using an app on a phone, or receiving a reward in a video game can trigger tax consequences that require substantial record keeping and analysis. The result is perverse. A technology that is designed to reduce reliance on intermediaries can become difficult for ordinary Americans to use unless they turn back to the intermediaries simply to manage tax paperwork. For this reason, Coin Center is encouraged by the committee's work here today. The bills being discussed make progress toward three key reforms that Coin Center has recommended for years. First, Representative Yakum's Less Tax Paperwork for Digital Asset Owners Act would reduce the compliance burden on individual taxpayers by exempting gains from certain stablecoin transactions and gas payments. Congress has long recognized that some transactions technically produce taxable income, but are not worth the administrative burden required to measure and report them accurately. The point is not that these transactions are outside the tax law in theory. The point is that the tax system has never realistically expected ordinary Americans to perform capital gains accounting for every low-value exchange of personal property. If someone sells an old rug on Facebook Marketplace, they usually do not stop to calculate the basis and gains on that transaction. If a 12-year-old trades baseball cards with a friend, we don't expect her to file Form 1040s. We strongly recommend that the committee also consider extending the exemption to low-value transactions in non-stablecoin cryptocurrencies like Bitcoin, modeled after the personal foreign currency transaction exemption. The tax code should not privilege certain types of cryptocurrencies over others. Whether someone uses stablecoins like USDC or Tether, or cryptocurrencies like Bitcoin, Ether, and Solana, a reasonable de minimis rule should protect taxpayers from gotcha consequences on small transactions. Second, we are encouraged by the exploration of a simplified accounting election for taxpayers who engage in high volumes of crypto transactions. Coin Center has advocated for a mark-to-market style election because it could substantially reduce tax complexity for many users. In contrast, Coin Center does not support applying wash sale rules to cryptocurrency transactions. Those rules are a poor fit for open cryptocurrency networks, just as they are for most commodity-like assets, and would create substantial new compliance burdens. If Congress nevertheless imposes them, the simplified accounting election offered by Representative Yakum would be an essential mitigation and not a substitute for getting the underlying policy right. Finally, we appreciate the committee's effort to clarify the tax treatment of block rewards in the Tax Clarity for Mining and Staking Act from Mr. Kerry. Coin Center has long argued that newly issued cryptocurrencies awarded to validators should be taxed when sold or exchanged rather than when created. This approach better reflects the reality of block rewards as newly created property and fixes a fundamental mismatch between current IRS guidance and the mechanics of how these networks actually operate. In short, Congress can make crypto tax compliance simpler without creating special tax preferences. It can preserve tax enforcement while removing traps for ordinary users. And it can do so without forcing Americans back into the intermediated system that open networks were designed to make optional. Thank you, and I look forward to your questions.
Mr. Kircher, you may begin when you're ready.
Chairman Smith, Ranking Member Neal, and distinguished members of the committee, thank you for the opportunity to testify today. As someone who follows this space closely, I hear a lot about how we need to write rules of the road for taxing digital assets. This is a helpful metaphor, but I might tweak it slightly. The tax system is built to be adaptive to any economic activity or new industry, and that includes digital assets. So when we talk about the need for metaphorical rules of the road, in tax, the road already exists and it already has rules, but new industries and structures can create potholes for the tax system. Left unchecked, these potholes can turn into sinkholes that beget massive tax shelters. Policymakers should look out for these and address real problems we've seen as the digital assets industry has grown. And keep in mind the first rule of road maintenance: don't make the roads worse. As these bills progress, I encourage policymakers to consider 3 tax policy principles most closely: parity, administrability, and guardrails to prevent abuse. Some of the provisions in these bills would make improvements consistent with these principles. For example, one of the bills would extend anti-abuse regimes like wash sale rules and constructive sale rules to digital assets. That's a good idea. Another example is the de minimis provision on qualifying stablecoins. A targeted approach with guardrails can reduce paperwork and compliance burdens without creating substantial hidden tax subsidies for digital assets. But the rule should remain targeted because a broader de minimis provision risks abuse and would favor investments in digital assets over those in traditional finance. There are some provisions in these bills that do provide subsidies or create risks of abuse. Take, for example, the bill addressing the treatment of mining and staking rewards. These rewards are payments in digital assets for validating transactions, similar to the income earned by a notary for validating documents. First, the bill makes explicit the current rule that rewards are taxable when earned. That's the correct policy, and it's already the law. It's consistent with long-established tax principles. It's consistent with Section 61 and the IRS position. It's consistent with how income from other similar activities are treated, and it's consistent with a correct tax court ruling from last week, which found that staking rewards are taxable on receipt, rejecting the taxpayer's arguments as moot, irrelevant, or without merit. The problem is that the bill then provides an election for stakers and miners to defer income paid in the form of newly minted coins until disposition. This violates parity with traditional finance and the principle that income is taxed on receipt. Economically, it functions as an interest-free loan from the government. Here's one example of how this could play out in the real world. The Clarity Act would allow consumers to earn deposit-like interest on stablecoin balances held in accounts. If Clarity and deferral become law, consumers will get a better tax result by investing in stablecoin accounts than in high-yield savings accounts at a bank. Deferral would become a new tax subsidy, encouraging investment in digital assets relative to other types of investment, risking deposit flight from banks into accounts that lack important FDIC insurance. Deferring tax on mining and staking rewards isn't just a distortive subsidy, it could also undermine administrability. Deferral increases complexity for taxpayers and makes it harder for the IRS to do its job. The government will need to write new rules. Taxpayers will need to track and trace various aspects of transactions over many years. It would be simpler for everyone to tax the income upon receipt, consistent with normal tax principles. Deferral on mining and staking rewards also creates risks of abuse. Despite some thoughtful guardrails in the bill, it may be possible for taxpayers to permanently escape tax by earning rewards through certain business structures. This would convert an interest-free loan from the government into a loan that never has to be paid back. This is a better tax treatment than even what traditional retirement plans offer. Here's my final point. To date, industry has properly identified some of the potholes. The wash and constructive sale rules are good examples. But if you're out fixing potholes that others have flagged, it's worth fixing the other ones you see along the way. For example, the risk from non-compliance for digital assets operating on decentralized finance networks remains high. If we can't find a way to improve transparency and compliance for DeFi, it will remain difficult for honest taxpayers to pay what they owe. And DeFi will be a favored tool for tax evasion and illicit finance. Thank you for the opportunity to testify, and I look forward to your questions.
Thank you. We'll now proceed to the question and answer session. Many participants in the digital asset market are not large financial institutions or wealthy entrepreneurs holding digital assets for sophisticated investment purposes. They are everyday Americans. Digital assets can provide a low-fee alternative for Americans to access payment systems, savings, and investments without high fees, credit checks, or deposit minimums. Digital assets can also provide instant payment for small business owners at a fraction of the cost of traditional checks or wire transfers or even traditional credit card fees. The Coinbase Institute has data that suggests 1 in 5 American adults own crypto, and 70% of owners make less than $100,000 per year. Mr. Slotkin, when it comes to tax policy, this committee has prioritized everyday working Americans. How do the reforms that we are considering benefit working families, and what are some of the key challenges that they face that these bills address?
Thank you, Mr. Smith, for the question. There are a number of provisions in the legislation, I think, that benefit small taxpayers and small businesses. You mentioned stablecoins. Stablecoins are innovative, they're a transformative method of payment, and they have the ability to essentially create much more efficiency for the entire payment structure. So a small merchant, for example, can use them much more effectively than existing systems. So I think stablecoins are a good example of that. We have de minimis rules that are in the proposed legislation. The de minimis rules take away a lot of the clutter, we heard a lot about record keeping, about the need for that, and I think that alone solves a lot of problems. We have an alternative mechanism for calculating gain or loss, which benefits small taxpayers for small persons who can use that for their businesses, so that essentially cryptocurrency is accessible for just about everyone. So I think the great aspect about the legislation itself is it has a number of provisions that simplify, reduce clutter, and promote the use of cryptocurrency for the efficiencies that I think they were intended.
Thank you. Financial markets need clear rules of the road. To make it easier for Americans to access digital assets, we must provide greater tax clarity for those who make these networks run. This includes individuals who engage in mining or staking to validate the blockchain and are rewarded for that work with newly minted digital assets. Certainty is also important to ensure America remains the global digital asset leader and encourage foreign participation in our domestic markets. Mr. Somensato, how confusing is the current tax treatment of mining and staking rewards for the individual taxpayers involved? And how will addressing issues like timing and sourcing of the derived from mining and staking enhance the ability of the U.S. to remain the crypto capital of the world?
I think in my written testimony, I cited to a survey that related to the confusion that users of Kraken, one of the large exchanges in this environment, face when dealing with taxes, and it was something along the lines of like 89% of individuals reported some level of confusion, and a large portion of that was related to how to manage something like a staking reward. So I think fundamentally you have a very large subset of the population that is interacting with these technologies that have expressed this frustration and this confusion. And I think the bill, as proposed, does a really important job of not just clarifying how that's going to be treated for them, but recognizing that that treatment aligns with what an individual who is using this technology probably assumes when they are performing a validation technique. Just for a little context, a user who might be a solo staker on the network, meaning they just want to participate in the validation process to support the ability for everybody to transact peer-to-peer, is essentially just interacting with their computer in the same way that a lot of us would interact with an app on our phone, as I mentioned in my opening statement. And for them, the idea that newly generated tokens that are coming from no one, there is no one that is paying them, there is no compensator that is on the other side, should be taxed right at the moment that they receive them is kind of contrary to what you would imagine in similar circumstances. Take, for example, an athlete who signs an autograph to a piece of, like a book that they're writing. Well, they don't assume that the moment that they put their autograph to that, even if it is more valuable out on the market, that they now owe taxes on that, right? The creation of that value is done by the staker, and recognizing that with the legislation in the way that it does is very important.
We must ensure that the IRS can administer and enforce tax laws while not imposing undue reporting burdens on taxpayers complying with the law. Right now, the current system is a far cry from that. It's estimated the IRS last year alone received hundreds of millions of Form 1099 DAs for digital asset transactions that taxpayers are already required to report on their tax return. Even though up to half were for amount less than $10, the current system creates an immense burden for taxpayers and the IRS with little tax revenue to show for it. Ms. Riley, how does this flood of tax filings and paperwork impact not just brokers or IRS personnel, but those participating in the digital asset market? And how do these bills' provisions on gas fees, stablecoins, and simplified accounting methods for taxpayers help address that burden?
Thank you for the question, Chairman Smith. I think one thing I'd like to focus on is that just beyond your general crypto transactions, as blockchain technology proliferates, you have an increasing amount of even just general financial activity happening on blockchain as an alternative to the traditional rails of finance. So transfers of tokenized securities, transfers of stable coin, they all trigger these micro transactions of transaction fees, which results in voluminous tax reporting to taxpayers that may not even fully comprehend why they are getting tax reporting for, they're imagining, oh, I'm transferring a tokenized security, but I'm also getting this micro transaction with minimal gain or loss as well. So it adds a level of complexity and challenges on the administrative side. In the proposed bill, the exemption for transaction fees under $10 eliminates a lot of the noise and the friction that occurs in this space with very little impact to tax revenues, especially with the preservation of the unrecognized gain that goes into tracking.
Thank you. Digital assets do not necessarily fit into existing rules and regulations. In some parts of the tax code, standard definitions simply do not apply, while in other parts, the application of the law to digital assets is unclear or confusing. For the sake of simplicity for taxpayers, we should be looking at how to bring digital assets underneath the umbrella of existing tax law. Mr. Kircher, how would you look to using existing rules governing traditional financial assets, and how do the policies we are considering today on like charitable giving or access to U.S. markets for foreigners help individuals and entities find balance between digital assets and similar financial assets?
I think that's a great question, and thank you, Chairman Smith, for it. Focusing on the charitables concept that you were mentioning, I think the bill takes a really thoughtful approach, right? For the largest digital assets, the ones that are widely traded, you are able to use a spot price under your bill in order to value for charitable donation purposes. That's way simpler than the current rule where you actually have to get an appraisal. And that appraisal system is not ideal for widely held digital assets, A, because the appraisal is costly, but B, because it's subject to potential risk of abuse. As you know as well as anybody, valuation issues in charitable space have become quite a problem in other spaces, including syndicated conservation easements. And so I think the amendment that was issued last night takes an additional step to further use the market for price discovery, requiring the sale of the assets rather than relying on appraisals that are both burdensome and getting to the wrong, or risk getting to the wrong answer.
Thank you, sir. I now recognize the ranking member for any questions.
Thank you, Chairman. I'm pleased that you noted the fact that there are ambiguities that we would like to use our panelists to help clear up. So, Mr. Ketcher, in reading your testimony, if you don't mind, I want to ask you, as you spent some time on some of the allotted questions that we have, you pointed out that providing that those who receive staking rewards with the ability to defer recognizing income on those rewards has the potential to create real imbalance in our financial system. Can you explain in more detail on how this tax advantage could potentially encourage people to move their money out of traditional banks and into cryptocurrency, consistent with the discussion we've had here clearly about establishing rules of the road?
Thank you, Ranking Member Neal. It's a great question. I already mentioned the kind of example of a high-yield savings account and how deferral would put digital assets on a better footing than a high-yield savings account, so that's one kind of issue. But imagine that you're an investor saving up for retirement, housing, whatever, and you're thinking about, say, corporate stocks or bonds, right? If you get dividends from a corporate stock, that's taxable when received. If you get interest from a corporate bond, that's taxable when received. If you get dividends from corporate stock, that's also taxable when received. Deferral would be a better treatment than either of those and would tend to push people from traditional financial instruments into digital assets ones. And as you know better than anybody, the tax rules can really shift markets and tell people kind of where they should and shouldn't invest.
Mm-hmm. So the follow-up, just as you've noted, I think one of the biggest concerns I've had, which have been shared with the panelists in the past, we've done some really good work on this committee with retirement savings. And I think being mindful of exposure to anything that might be disruptive has to be done with the greatest of care. And I point that out largely because we're living longer, we want to live better, and I think in the retirement space alone, that a lot of scrutiny has to go into the conversations and suggestions that are emanating from not just the testimony of our panelists today, but from some of the points that our members have made. And if you think that people are angry given the savings and loans issue or the issue of the collapse of Wall Street in 2008, my God, if this isn't done with great delicacy, you'd be looking at a revolution. So that's the point that I want to make, Mr. Chairman.
Thank you, Ranking Member. Mr. Smith.
Thank you, Mr. Chairman. Certainly thank you to our witnesses as well. Obviously, this is a complex and rapidly evolving area of a significant portion of our economy these days, and we know that while technology is changing, one point is certainly clear, and that's Congress cannot afford to ignore developments occurring before our very eyes. As policymakers, our responsibility is not to pick winners and losers, but to provide clear rules, promote compliance, and ensure American innovation can thrive here at home. I appreciate our witnesses joining us here today and helping the committee better understand industry priorities, challenges facing taxpayers, and opportunities to improve our tax code. This committee has seen firsthand how tax policy affects American competitiveness. Before enactment of the Tax Cuts and Jobs Act, the United States remained one of the highest corporate tax rates in the developed world, while other countries adopted competitive tax regimes. I'd like to point out that even President Obama recognized that our rate needed to be modernized to stop capital formation and jobs from being offshore. Congress acted, we modernized our tax code, improved competitiveness, and corporate inversions largely disappeared. There is an important lesson in that experience. Innovation does not stand still while policymakers debate. Capital, talent, and investment gravitate toward jurisdictions offering certainty and stability. Today, digital assets present a similar challenge. Regardless of one's view of cryptocurrency or blockchain technology, these innovations are likely to remain part of our economy and become more integrated into everyday commerce. Entrepreneurs, developers, investors, and users need clear rules of the road. When uncertainty persists, investment moves elsewhere. The U.S. already leads the world in capital markets, financial innovation, entrepreneurship, and technological development. We possess the infrastructure, talent, and investment ecosystem necessary to remain the global leader in digital assets as well. I appreciate President Trump's commitment to maintaining American leadership in this sector, and Congress has an important role to play. Our goal should be simple: establish clear, workable tax rules, encourage compliance, promote innovation, and ensure digital asset investment, jobs, and infrastructure continue to be built in the U.S. rather than elsewhere. I look forward to hearing from our witnesses today in discussing how Congress can provide certainty for taxpayers while strengthening America's position as the world's leader in digital asset innovation. Ms. Riley, I noticed then and pleased the Tax Clarity for Mining and Staking Act would establish clearer sourcing rules for staking rewards, potentially onshoring significant staking activity back to the U.S. This simple fix in the tax code will go a long way in driving growth for U.S. crypto, bolstering the tax base, and making crypto safer for users. I was wondering if you could explain the benefits of establishing clear sourcing rules for staking rewards in order to attract more staking activity here at home.
Thank you, Congressman, for the question. I think sourcing has been a critical area of ambiguity with validation rewards generally. Under the existing tax principles, it's unclear exactly how you would source them, and that uncertainty has been incentivizing offshoring of much of the infrastructure for staking and validating. Having a rule such as in the Tax Clarity for Mining and Staking Act provides clarity that the income should be sourced to the resident of the recipient. That ensures that U.S. staking providers can be on a level playing field with non-U.S. Staking providers, such that the income is sourced to the resident of the recipient regardless of where the infrastructure is located. Sourcing rules need to be based on factors that can be both clear and administrable and also not easily manipulable. And having them be based on things such as location of the validator results in significantly different tax outcomes based on immaterial differences.
Okay, when you say not easily manipulable, I think I said that right. Can you say what we should maybe focus on there?
I think it's basically removing it shouldn't be based on where exactly the validators are located, where the people are located. Those are things given in the cloud environment can be easily moved offshore. And we already see that happening, where staking providers can move their infrastructure offshore. They can shift that, validation activity offshore. And
So public policy-wise, your priority would be what?
would be to source, if by sourcing to the residence of the recipient, there's a clear rule that you can identify the jurisdiction for tax more easily and not have to go through a facts and circumstances analysis for each income.
Great. Thank you very much. I yield back.
Mr. Doggett.
Thank you. Mr. Karcher, am I correct from your testimony that the mining and staking legislation before us does not even the playing field for crypto, but it gives it special tax advantages?
That's right. Under current law, as affirmed by the tax court last week, those rewards are taxable when earned.
And is there any doubt that, as you pointed out, not just this legislation, but combined with the Clarity Act, legislation that the crypto industry has invested literally tens of millions of dollars to gain approval for, that the goal is to strengthen and expand the crypto industry?
I can't speak to the goals, but I can say that that would be the effect.
The effect, okay. And as far as effects, your written testimony lays out how the legislation that's before us could set up another multi-billion-dollar taxpayer bailout of the type we had a few years ago that I opposed. Would you just walk us through how crypto could become kryptonite for our economy?
I think one thing for policymakers to consider on this is that if digital assets become a larger part of retirement accounts and the assets remain highly volatile or in a worst case scenario crash, that would have an enormous impact on households' retirement savings. And if that were to happen, I think policymakers would have to think about whether to respond with something like a bailout.
As you know, one of the big players after having condemned crypto years ago in crypto is President Trump and the Trump family. The Wall Street Journal has indicated that World Liberty Financial, just one of the family's crypto ventures, has put at least $1.2 billion in cash into the Trump family's pockets in the last 16 months. And Eric Trump, of course, has American Bitcoin, a Bitcoin mining company that hit a $13 billion evaluation when it went public. Mr. Karchner, is it true that one of the bills before us would let a company like American Bitcoin and the Trump family members who own it, in essence, to defer their taxes indefinitely?
That's right.
And does this provision that you've discussed as far as illicit finance, what we know to have been the experience with Bitcoin, Binance, I guess, allegedly having helped Hamas, Hezbollah, Iran's Revolutionary Guard, and others move so much money, $1 billion, I believe, across its platform, tens of millions to it after October 7th itself.
That's right.
That's right. So with reference to any of these, we got 7, 8 bills before us. Does a single one of them do anything to reduce the danger of illicit transactions and more misuse by Iran, Hamas, Hezbollah in misusing these accounts and avoiding any accountability?
I don't think that anything in this bill would improve safeguards and guardrails on that level. I think that's something that policymakers should consider as the legislation progresses.
Well, you would think that in the long months of this that some consideration would have been given to it. Would strong tax reporting requirements help the IRS and law enforcement clamp down on this illicit activity, including illicit activity not only by terrorists and criminals, but just your common, ordinary tax evasion of the type we have had alleged against President Trump himself?
Yeah, tax reporting and collection can absolutely reduce the risks of tax evasion or illicit activities, and I think that there's more to be done here.
And can that be accomplished in a fairly straightforward way so as not to encumber any of those who believe in crypto?
There's certainly precedent for it in traditional finance. We already have rules that do just that. I think that you would need to think about whether they fit the decentralized finance framework, but I don't think it's fatal. I think it's workable. You just need to figure it out in a slightly different way.
Thank you very much for your testimony. I yield back.
Thank you, Mr. Kelly.
Thank you, Chairman, and thanks our panel for being here today. I don't think there's anything more confusing than what we're trying to transfer into how the currency works. From the day people started trading livestock for something else, and we got on and on and on, and now we've gone through this currency thing. One of my questions is, or the piece that I have, is an amendment to the 1986 code, 40 years ago, when it comes to charitable giving, and the exemption for people on charitable giving when they use this type of currency to trade it. So. And I'll be the first one to tell you, I have been mystified now for quite some time as to the creation of this, the birth of this whole idea. We have a new currency to deal with. But the question is always going to come from the government is how do we tax it? How do we figure this out? How do we get it taxed? Mr. Zlotkin, can I ask you, from the perspective of charities and donors, does the current appraisal requirement, on top of the current appraisal requirement, create a meaningful barrier to charitable giving? And would the framework proposed by the committee help address that challenge? And before you answer that, when we did the original Tax Cuts and Jobs Act, I can remember one of our members coming in and talking and saying, you know what, we've got to be careful what we're talking about when it comes to this charitable, because I got a lot of people who I represent are questioning the fact, why should they continue to make charitable donations if there's going to be a tax inference to that? And the answer was, that really shouldn't bother people. If they really want to give to a charity, it shouldn't matter. And they said, really? Watch the numbers go down and then tell me it doesn't have an effect. So if you could, Mr. Slott, because I think this is a very confusing thing, if you can bring some light to it, what can we do? What would the framework proposed by the committee do to help challenge that? I mean, we have to figure out what we're going to do with it and how we're going to tax it or not tax it or what we're going to do.
Thank you for the question, Congressman. I think the bill, first of all, I think one of the things we've argued very strenuously is for parity with the rest of financial services, that this industry is $2 trillion. And we need rules of the road. We need some clarity associated with that. One of the aspects of that happens to be charitable giving and charitable donations. Right now, if an asset is publicly traded with great frequency on a public exchange like Coinbase, and you can get market data instantly from your phone, you still need an appraisal to give that to charity. That is an inherent impediment to charitable giving. If you have to go in and hire someone to do something that you can just essentially establish on your phone. So one of the great advantages of the bill, actually, is that it introduces parity with publicly traded stocks and it's widely traded digital assets. Widely traded digital assets, as defined, which include lots of safeguards and protections, so that they only apply to assets that have price discovery on public exchanges, rules against self-dealing. All those things are dealt with, and they provide a rule of clarity that you don't need to go and get an appraisal for that. So I think, to your point, it greatly enhances and facilitates the ability to make charitable donations.
Yeah, I agree with you on that. I think if we make it more complicated for people to be charitable, we're missing the whole point of being in America. So I appreciate you all being here today. This is as we transition and go into this, some people understand this very clearly. But I'm looking at it strictly now from a charitable standpoint. If you have an asset that you can donate and make sure that the charity benefits from it, I don't know why we'd have to go through this other process. So I appreciate your answer on that. And as we go forward, we're going to have a lot more discussions, I'm sure. This is not the way we're all used to things happening, but I'm sure this happened also in prior times when people tried to figure out how this is working and how does currency work, or the lack of currency, or what it is that we do. And so if you have something that's valuable and you want to help a charity, why not be able to do it without having to do this whole process? So I appreciate you all being here today for helping on something that's, I think, as we transition to it, we'll get more used to it. We'll look at it more the way we look at other assets. So thank you so much.
Gentleman yields. Mr. Thompson, you're recognized.
Thank you, Mr. Chairman. This is an important hearing, and I'm glad that we're doing this. These are critical issues, and we need to make sure we get it right. And I really want to associate myself with the comments of Ranking Member Neal, especially on the liability issue. We'll probably be going back and forth on the tax side of things for as long as any of us are here. But on the liability issue, that's going to be critical. And we need to really make sure we understand that and don't leave the taxpayers holding anybody's bag. Mr. Karcher, I was reading through the testimony, and I was particularly interested in the tax treatment of mining and staking awards. Seems to be a real sticking point in all of this. And it seems that maybe we're at an impasse on where we go and how these issues are viewed. Some folks are telling us that mining and staking rewards are basically the same as payment for work in the case of mining and interest payments in the case of staking. And others tell us that it's the same as self-created property, like growing crops, growing grapes. Can you kind of help us sort through the distinction? And in your view, what's the better analogy?
Thank you, Mr. Thompson. It's a really good and important question. This has really become a little bit of a battle of analogies, right? But let's step back for a moment and talk about what's really happening with these transactions. So miners and stakers, the validators who are receiving those rewards, what they're getting rewarded for is not for solving a complicated math problem in the case of mining or for putting up their staked crypto in the case of staking. They're getting paid in order to update the digital ledger to record who owns what. So it's really a payment for service when you think about what's happening here. That's not like harvesting your own crops or selling your own chair that you made as a furniture maker. And that, I think, is crystal clear in the tax court's holding from last week. I think an important part about that case is the tax court decided to issue that as a tax court memo. That format is normally reserved for cases where the current law is extremely clear and well settled. And so they didn't seem to think that there was a lot of ambiguity here, and neither do I. We have argued at the Tax Law Center for many years that the current treatment is immediate taxation, and it's more like providing a service rather than harvesting a crop.
Thank you very much. Mr. Chairman, I'll yield back.
I want to thank the witnesses for being here today, and this is a very important topic, as the chairman said. And you know, as we work towards solutions here, I think we have to figure out a consensus on the tax rules for the digital asset industry. And some members of this committee might view the digital asset industry and the blockchain as the next technological breakthrough for the financial services industry. And some might view it as a complete Ponzi scheme, and maybe there are opinions somewhere in between. But regardless of opinion about the industry or the asset it produces, it should not preclude this committee from writing clear tax rules. For an industry that has the same global market capitalization as Amazon, one of the major flaws in the current digital asset environment is the requirement for separate reporting for every transaction, no matter how small or routine. This burdensome for taxpayers and administratively inefficient for the IRS has left many taxpayers, brokers, and the IRS spending dollars to track pennies. Mr. Zlotkin, I understand Coinbase is a stakeholder that struggles with these same issues. I think we've discussed this, millions of tax records for very small amounts. How do you think the bills we are considering today help address this issue?
Thank you, Congressman, for the question. I think the bills go a long way towards solving that problem, and they reduce a lot of clutter for the system and allow the IRS to focus on what it should be focused on, which are large transactions that produce lots of income. So if you look at Coinbase, and I've said this repeatedly, probably half of our actual submissions on 1099-DAs are for transactions that are less than $100. So, and that we're talking about 800 million transactions that we force the IRS to ingest through data. So the bills, to the extent that they eliminate stablecoin reporting, which is probably half of that amount, and they provide a de minimis rule for what we call gas fees or transaction fees, that's the bulk of what I'm talking about. So I think just by doing that alone reduces the enormous amount of clutter that the IRS faces and allows, again, as I said, the IRS to focus on the bigger picture.
So I think what you're referencing is something that we talk about often here is the inefficiency or the efficiencies of the IRS. And clearly, if we can reduce that burden, we're not going to stop the use of cryptocurrency in the United States Congress. I mean, that's not what we're here to talk about. We're talking about how to tax these transactions, whether they be classified as currency or property. And so if the IRS is having to monitor these, if we can create a de minimis situation where there are literally millions and millions of transactions that are not having to be monitored by the IRS, we're going to free them up to do other things that they're rightfully should be doing with the technology and the people they have. I think another issue we're aware of as it relates to the taxation of mining and staking rewards is timing. And another issue, however, is sourcing issue. And I think we talked about this a few minutes ago. In the Tax Clarity for Mining and Staking Act, the source of income from newly minted digital assets is based on the resident or the recipient at the time of the income is included. For each of you on the panel here, and you bring a lot of knowledge in this space, do you think this is the right approach for the sourcing perspective? If you can give us a simple yes or no, that's great. If you want to elaborate, we can maybe in just a second, but Ms. Riley.
Sure, yes, and I think any other policy would continue to incentivize offshoring of validation activity and would also adversely affect U.S. competitiveness.
Mr. Zlotkin.
Yeah, I totally endorse that, and I think we've advocated for that for a while. In fact, we've gone to the IRS and sought ruling on this very point. The simple fact is that and this really is attracting foreign investment into the country. We want foreigners to be able to stake on U.S. platforms. Right now, if a foreigner wants to stake on the Coinbase platform, we have to essentially tell them that everything that's done for that staking validation mechanism is done offshore, with offshore infrastructure, with offshore people, with offshore aspects of Coinbase. The reason being that they don't want any entanglement with the United States. What this source rule does, very simply, it says, if you're a non-U.S. person, you get non-U.S. treatment, you're not subject to withholding tax. End of story. It solves that problem. It allows us to bring the technology onshore where it belongs and where we can grow it in the United States.
Mr. Sato?
Yeah, I would agree with the comments of the earlier witnesses.
Okay, Mr. Kircher?
The residency-based rule would, I think, make the rules much clearer. There are different approaches to this, and there are trade-offs among them. Would be happy to follow up with you or your staff on those trade-offs and different approaches.
One last question here. Brokers and dealers of securities and commodities can use the current mark-to-market accounting method. No current option is generally available for brokers or dealers of digital assets. That's why the PAR Act aims to provide parity between digital assets and other traditional assets by allowing digital asset dealers and traders to utilize mark-to-market accounting. Mr. Zlotkin, Mr. Sato, does extending the mark-to-market accounting to dealers or traders of digital assets make sense to you?
Yes, I think, again, the bill is named parity. I think parity, this is something we've also argued for rather strenuously over the many years. Parity with financial services, so we don't create an advantage for one industry versus the other, is extremely important. So allowing mark-to-market, and also there are other aspects of parity, including securities lending, various aspects that create parity of various rules, increase liquidity, and acknowledge the strength of this industry. I think all those go a long way towards helping and do a very good job of doing that.
Mr. Sato?
Yeah, I would just add that I wouldn't limit it to traders and dealers. Truthfully, the nature of how this technology works is that people can make numerous transactions in a small period of time, and one of the parts of Mr. Yakim's bill would consider kind of a similar accounting method as it applies to individuals who are involved in a high frequency of transactions, and I think that makes a lot of sense, particularly from an administrability perspective.
Mr. Larson, you're recognized.
Thank you, Mr. Chairman. I want to commend everyone for their testimony and also for the bringing up this extraordinary concept. I don't know how many Americans are, totally comfortable with this, but what I like to start is it's impressive to read what all of you had to say is, how comfortable do you feel with Congress making a decision?
I'm happy to jump in there.
Yeah.
I was just going to, I think in the alternative, the question is, what does the alternative look like right now? And as individuals...
Well, if you're at Augie and Ray's, what does the alternative look like?
I can tell you from personal experience and from anecdotal experience with lots of people who participate in these networks, it's pretty nightmarish. It's
pretty what?
Nightmarish.
Okay.
You can engage with these networks in a variety of ways. We often talk about the ability to make payments in a peer-to-peer manner, but there's also the possibility to post social media posts that require paying a small amount of transactions. There's video games that are associated with digital assets. All of that activity comes out to the end of the year, a huge long list of transactions that the average taxpayer who's doing this kind of from a personal capacity.
Do you feel that Congress is equipped and has enough knowledge and information to act accordingly?
I think for some of these targeted pieces that we're talking about today, there's been a lot of discussion over the years. We've put together a 60-page report after 60-page report on a lot of these concepts. And so I wouldn't necessarily say we need to change the whole tax
With all due respect
code.
to the 60-page reports, I'm sure they're thorough, et cetera. That's not what I'm asking. Do you think that people in the country, et cetera, I think this is an important issue, and I think that your remarks and testimony, whether it's 60 pages or 600, they certainly raised a lot of questions. I think Mr. Neal raised probably the most critical one, but I'm curious, Mr. Zlatkin, what's your take on this?
I think it's incumbent upon Congress to do something. I think
So
we
you
need
think
rules.
it's that urgent that we act now?
It's a $2 trillion economy that has very few rules.
And the
Correct.
urgency is, again, I'm talking to a guy at Augie and Ray's in East Hartford, so what's the urgency for him to act?
The fact that he may not know the rules of how to report income, he may not know the rules.
So a guy who's trying to make ends meet in this economy, et cetera, he feels that sense of urgency about this, and that if Congress doesn't act to say, well, protect his Social Security as opposed to this, you think that that's more urgent?
I don't think it's a choice between Social Security and tax policy.
What's it a choice between?
I think tax policy is extremely, and this technology
Complex.
also serves the underserved, like people who are not banked, who can actually therefore not pay enormously
So
big
I guess the point
gas
I'm
fee.
getting at is
Yeah.
trying to convince the public, as is going to be the case in trying to convince Congress about the urgency and what are the underlying safeguards, et cetera. And all of you, I think, are very bright and capable. Ms. Riley, what about yourself?
I think just to reiterate some of the other points, I think that we're existing without a full tax framework, and I think this increases abuse, which can reduce compliance, which does harm the fisc. I think that by having rules, you can increase compliance. So it would affect everyday taxpayers in that you want people paying their fair share. Tax fairness is very important, and you need a workable tax framework to achieve that.
Mr. Karcher.
Here you're taking two incredibly complicated topics and kind of smushing them together, right? You've got digital assets, very complicated, and a lot of education that needs to happen, and then tax, right? Also very complicated with a lot of interactive effects that are sometimes intuitive. And so I think that there is a really important factor of making sure that the members are educated and really understand what they're doing before acting.
And probably the most important thing is that we get it right, right? And so I think there's kind of a consensus building around this that it's an important industry. It's certainly, there is a sense of urgency, but there's also a sense of, are we acting too quick without knowing what we're doing? And when I say we, I'm not talking about you. I'm talking about the United States Congress, who represents the public. So I guess color me. I think this is a promising industry with other, but there's far more questions than there seem to be answers to that give you the confidence that we've got it right just yet. And this is a lot of good work done in these bills as well, but I think it's going to take a lot of public hearings and further hashing out. Yield back.
I know it would shock the gentleman to say I applaud our chairman for starting this bipartisan task to try to figure it out, because I think your original question was a great question. Is Congress prepared? Right. And the answer is probably not yet. Not yet. Ms. Miller.
Thank you, Mr. Chairman. And I do want to thank Chairman Smith for calling this legislative hearing. And I want to thank you all for being here to discuss the important issues. The digital asset market has grown rapidly over the last several years, and we are at a crucial moment where tax clarity is needed to ensure that the United States remains the crypto capital of the world. Without a clear administrable tax code, digital assets will be pushed offshore and give advantage to foreign adversaries and weaken our financial stability. As the digital asset market continues to grow, more and more taxpayers have entered this space. However, due to confusion, ambiguity, lack of clarity, as highlighted today, some digital asset owners may have underpaid taxes due. These taxpayers may be afraid to come forward and report their mistakes, fearing that the IRS may impose harsh penalties on what was otherwise well-intentioned activity, or maybe even regret those less well-intentioned activities that they're coming forward and willing to pay what their due is to start having a clean slate. That is why the Digital Assets Voluntary Disclosure Program Act would direct the Treasury to provide a voluntary disclosure program for taxpayers who failed to comply with tax laws related to digital assets to come back into compliance, as well as providing reduced penalties and a clean slate in the process. Mr. Samansato, do you think that taxpayers could benefit from a program like this, given the lack of clarity regarding the taxation of digital assets in the recent years?
Yes, Congresswoman. I think crypto tax has evolved over the years through notices and FAQs and enforcement actions. And so going to the gentleman's questions earlier, it puts the individual taxpayer in a very difficult position of people who are already engaging in this technology and want to engage in it. And I think from the perspective of trying to bring the clarity that people are talking about here today and provide that framework that will allow people to proceed forward, it necessarily needs to come with an understanding of what the last decade plus has looked like for a lot of individual taxpayers. And so I think that voluntary disclosure program is really important. I guess I would even add too, and this is not necessarily part of the bill, but the opposite is true too. For those of us who are like nervous about the tax consequences of what we do, I'm sure there's tons of us who have put everything at a zero basis because we have no idea really what we're looking at or when we're gonna potentially. And so, creating that level playing field for everybody and also allowing the consequences, understanding the nature of the consequences from before a period where Congress has been clear about what it wants is really important.
Thank you. It is clear that the status quo is burdensome and confusing for the digital asset industry, and without legislation, the problems will only continue. I am looking forward to continuing to work on these issues with my colleagues to ensure that tax clarity and parity allows the United States to remain the global leader. But we all will have a lot of questions moving forward. I thank you and I yield back.
Mr. Davis, you're recognized.
Thank you, Mr. Chairman, and thanks to all of our witnesses. Mr. Cantor, welcome back to Ways and Means. As my constituents are struggling under the Trump-inflicted crushing cost of higher rent, health care, food, gas, and goods, I question the appropriateness of gifting hundreds of billions of dollars in costly tax breaks to industry firms and wealthy crypto holders. As the president creates a $1.8 billion trust fund to give to January 6 rioters, and now is trying to take over all federal grants to gift his friends and wealthy buddies billions more in taxpayer dollars, I'm frankly shocked that our committee is once again seeking to gift billions in tax cuts for the wealthy. I understand the need to create meaningful rules of the road that create parity among similar assets. But in my estimation, the bills before us today fail to help working families while giving billions in tax breaks and loopholes without the necessary guardrails to prevent abuse, all the while privileging digital assets over other types of assets. So, Mr. Catcher, could you talk about the most important guardrails for digital assets in this tax space? That is, guardrails to protect consumers, prevent abuse, and promote parity among similar or other kinds of assets.
Thank you, Mr. Davis. I would probably focus on three things. The first is don't create unintended subsidies that will push people away from traditional financial investments into digital assets. You really do want true parity. I think the second thing I would say is you should extend anti-abuse frameworks from traditional finance onto digital assets as appropriate. You see that in some of these bills with the wash sale and constructive sale rules. And then the last thing I would say is I think there's worth study on the digital asset or crypto tax gap. A lot of crypto is now subject to information reporting that is really helping taxpayers in the IRS more easily find the right answer. There's simplification that can be done, but in general, the structure works. There's a huge slug of digital assets that still do not have any transparency or reporting. The problem with that is that without any kind of reporting, based on prior research in other spaces, you should probably expect less than half the tax paid or less than half the tax owed to be paid. So you should expect compliance below 50% or right around there without something in this space. So I think that's really important.
Let me ask, do we see a great deal of risk for the average consumer, the average working family? What does this really mean for them?
I think your average consumer or family still even today, despite the growth of the industry, doesn't have investments in this area and so aren't really directly affected. There certainly are families who do. The industry has grown quite a bit. Regardless of whether you're invested in this space or not, though, if there are subsidies that get built into this law, including deferral, that is something that all taxpayers have to pay for, right? Deferral isn't free. We have to borrow today to pay for any deferred taxes owed tomorrow. And so I think that's something really important. You might be somebody who's not even in this industry, but if deferral or something like that that is an improper subsidy would happen, there's a question of who pays for that. And I think it can be consumers and families.
Is there much likelihood that any of their assets might get entangled and they end up losing?
If you encourage through subsidies the investment in digital assets and the economy or in that part of the industry goes poorly, absolutely there are risks there.
Thank you. Now you're back, Mr. Chairman.
Thank you, Mr. Schweikert.
Thank you, Mr. Chairman. I apologize for my tardiness. We're down the hall actually arguing over water. Can you imagine that being from Arizona? My question is actually, one of the bills here is actually trying to sort of have a discussion on de minimis. You know, what would actually make it in parity to traditional finance? Do any of you actually feel you have a level of expertise or comfort to walk through a quick discussion on the de minimis language we have? Raise your hand. Let me know. All right. Discuss it with me. So if I have my network fees and those things within this, I'd had de minimis bills in the past, agreed they might have been hyper simple. What would you do? Are we going the right direction?
I think you're definitely going in the right direction. I think the areas of stablecoins and gas payments that have already been identified are important areas where a de minimis exemption would work. I think understanding the purpose of a de minimis exemption is really important. It's not a means to say, hey, we're going to ease the tax compliance requirements on you. I think an important concept that somebody else told me is the tax regime needs to meet the taxpayer where they are at. And right now you have many people making very small transactions involving cryptocurrency. And the over-criminalization of that activity, if you don't pay it right, creates an environment in which everybody is a tax cheat. And
Yeah,
so,
and you also have the problem of just even if it wasn't about that, it just compliance cost becomes.
That's exactly right. And so taking from the concept of like a foreign currency transaction, it wasn't that we wanted to say, hey, we're incentivizing people to go buy euros and then buy a croissant when they go to France on their trip. It is a recognition that when people traded into euros and then went on vacation and bought something, we could not expect them to do that capital gains estimation and pay those taxes, and that they weren't going to. And I think that is why we think at least that the de minimis exemption should go further to cover some of these assets like Bitcoin, where there is a very real economy for using it in small payments.
So you make the distinction between stable Bitcoin and the network fee?
Correct.
Okay. Anyone else have an opinion on this? Yes, sir.
I strongly endorse that. I also would say, so if you look at one spectrum, stable coins are right now subject to tax. They're treated as digital assets. Disposition, use of them is impeded by virtue of that. There's no gain or loss associated with that. A substantial amount of reporting, both by consumers, by retail users, and by us as a broker, have to be reported that way, as though those are taxable transactions. When you do that, you prevent the potential growth of stablecoins as an enormously powerful payment instrument that essentially provides average consumers a much more effective means with fewer costs, including fewer costs for less advantage to be able to, who don't have access to the banking system. So you have that. A lot of our industry is based on gas fees, network fees. They're less than $10 or often less than $1. Those also have to be reported. So we're essentially transferring a lot of focus, attention of the Internal Revenue Service on something that is not going to generate much taxable revenue and impedes our growth overall.
And okay, you basically went where I went. I have somewhat of a concern that is our language robust enough to make it clear that we don't want to create a lot of noise. And so often we've actually had this thing where we're getting lots and lots and lots and lots of data, and there's really no tax collection benefit to it. And in many ways, if there's bad acts, it gets lost in that much noise. Also, I want to make sure, Mr. Chairman, that as we design this, if there's a value, a reduction of friction in being able to use the technology for transactions, therefore eventually lowering costs to consumers and to the retailer, I want that, because I actually believe if there's lots of these transactions, sorry, your network fees, those things will actually be competed down. And so that's just why I've always had a little fixation here on what we call de minimis, is if it doesn't bring us tax dollars, let's make it as efficient as possible, and there's some ways to design leakage and anti-fraud protection. And with that, I'll yield back, Mr. Chairman.
Thank you. Ms. Sanchez.
Thank you, Mr. Chairman. I appreciate the opportunity for all of us to talk about crafting a new tax treatment for digital assets. And while there are some provision in these bills that I think makes sense, I do want to express my concern about one proposal, which is the unlimited deferral for newly minted digital assets. As everyone here knows, these assets are becoming more popular in the U.S. economy, with nearly 1 in 8 Americans holding some form of digital tokens. But we have a unique opportunity here to create a new tax treatment for a new type of asset, and I really don't want to do that with inequities that are built in. As we've seen time and time again, wealthy taxpayers can use loopholes to enrich themselves. To that end, I would like to see some of these bills incorporate changes before they go forward to a markup. Mr. Karcher, you spoke in your testimony about how deferral violates parity with other industries. Could you talk a little bit about what problems you foresee that unlimited deferral for mining and staking would create?
That's a great question. I think unlimited deferral is particularly at risk of being pernicious because of how the rest of our tax system works. So if you were able to hold on to digital assets that were earned until death and then pass them on and get stepped up basis, that's not deferral anymore, that's elimination of tax. Now, the bills today have guardrails against that. They would say when you get rid of, dispose of your assets, they would be taxed at that point. I think the bill language solve some of the transfer at that stuff, but not completely. Because if you were to earn the rewards through an entity like a partnership, and that partnership that then gets held off to your kids, I'm not sure that the bill text actually prevents kind of game playing to, again, convert deferral into elimination of tax permanently.
Thank you. I appreciate your answer. I know that we've talked a lot this afternoon about comparison between these assets and traditional financial products. I want to make sure that these new tax treatments don't give any advantages to the digital asset industry, because that kind of deferral is a huge tax benefit and a huge departure from current tax policy norms. I also want to discuss the opportunity to increase some anti-abuse guardrails, because these tokens can be volatile. I want to make sure we have adequate anti-abuse provisions in place. And I was glad to see the inclusion of some wash sale rules and constructive sale rules, but we have a ways to go in terms of anti-abuse. In Congressman Horsford's Digital Parity Act, we have a higher threshold for charitable giving. And because of the volatility of these tokens, I believe that stricter guidelines around charitable giving are necessary in order to prevent fraud. Mr. Karcher, do you agree with that?
I think that you can actually kind of get both administrability and anti-abuse here at the same time, right? If you're able to leverage the market for price discovery by allowing spot price for really big digital assets, that's a win for everybody. And then there's a question of what to do with the less widely traded ones. There's a real risk for abuse there where the valuations can be manipulated. So if you either require the taxpayer or the charity to sell those assets and find out with the real market what the true price is, no more appraisals needed, nobody has to pay for that, and you have more certainty that you're avoiding abuse.
Great, thank you. As this committee knows, we had a bipartisan product with stricter anti-abuse frameworks, and I am glad to see the inclusion of some provision from Congressman Horsford's Digital Parity Act included in these conversations, and I would hope that my Republican colleagues would support them. I look forward to hopefully seeing more of those included so that we can create a lasting bipartisan tax framework with those stricter anti-abuse guidelines. And with that, I will yield back.
Mr. Estes.
Thank you, Mr. Chairman, and thank you for our witnesses for being here today to provide your expertise on an issue that directly impacts everyday Americans, our financial institutions, and our nation's competitive edge. As we sit here in June of 2026, the digital asset market has reached a staggering $3 trillion. Roughly 14 to 30% of American adults now own or interact with crypto. The United States represents 18% of the global digital asset revenue and commands over a third of all Bitcoin mining operations. But despite this momentum, the industry is operating in a regulatory vacuum. Current tax code never envisioned these cutting-edge technologies and forces digital assets into rules that don't explicitly mention them. The result is a lack of clarity and parity for digital assets, along with an administrative nightmare. The system now is the equivalent of a highway with no guardrails to keep cars from running in the ditch. If we don't establish some clear rules of the road to provide certainty, consistency, and simplicity, accidents will continue to happen. Consider the sheer scale of the paperwork burden on everyday uses of digital assets. For the 2025 tax year, IRS required hundreds of millions of 1099 DA forms. According to brokers, half those forms were for transaction amounts below $10. That's completely unworkable. Forcing a taxpayer or a broker to calculate capital gains on a micro transaction every time they buy a cup of coffee or interact with a blockchain protocol doesn't protect against tax avoidance and abuse. It just creates a mountain of red tape that stifles everyday commerce and innovation. Furthermore, our system for digital assets lacks parity with traditional finance. Important tax rules and familiar frameworks that govern traditional equities and financial institutions don't apply to digital assets simply because they didn't exist when the laws were written. Look at the difference between tax anti-abuse rules between digital assets and traditional securities. These longstanding rules around wash sales and constructive sales that protect traditional securities don't apply to digital assets. Extending these rules to digital assets ensure they are not treated better or worse than similar financial assets and provides consistency and clarity for investors and traders. Tax uncertainty is already pushing the crypto industry offshore, directly advantaging our foreign adversaries who are eager to replace the U.S. financial leadership. It's incumbent upon Congress to provide the standards that will allow the industry to thrive here in the United States and not cede the future of digital assets to China. Without U.S. authored standards and definitions, capital, innovation, and jobs will flee America. We must streamline the tax code to ease the burden on everyday Americans, brokers, and the IRS alike when dealing with digital assets. Our legislation needs to establish crucial guidelines that will allow innovation while protecting investors and taxpayers. Yeah, I look forward to being able to have some conversation around the legislative proposals. Mr. Slatkin, the data showing that half of all 1099 DA forms in 2025 were transactions less than $10. It's an administrative burden, as has been mentioned before. From a broker's perspective, how does this high volume of microtransactions impact your operations, and how the changes proposed in legislation we're reviewing improve compliance and relieve the administrative burden for both the consumer and the IRS?
Thank you for the question, Mr. Estes. I think it imposes enormous administrative burdens in terms of creating systems, data, things that we have to do essentially to report both to our customers, educate our customers, and then file that information with the Internal Revenue Service. We should not be focused on hundreds of millions of transactions that are, let's say, $10 or less. I don't think even the average taxpayer understands why we would have to do that. Their presumption is that those transactions should not be, are just not within the tax net at all. So I think the legislation goes a long way to solving that problem. It solves it for stablecoins, which don't even generate gain or loss. It solves it for de minimis transactions. We could probably expand it further, but as a starting point, this is an enormous benefit overall. I also want to reiterate something you said, but I think has gone unstated here. We are not here for a subsidy. Okay, I just want to make it clear that I did not come here to Washington to ask for a subsidy for our industry. And I really object to the terminology being used here as though we're asking for a subsidy. We're asking for clarity, rules of the road, so that our customers know how to report transactions. Yep. We want administrability, clarity, and so that's what really we're asking for.
All right, thank you. You know, the amendment to H.R. 9175 is premised on the notion that the draft left open the opportunity for significant abuse. However, the JCT score shows that the amendment would only net $6 million over 10 years compared to the base text of the bill, proving a very slow potential for abuse. Mr. Kersher, your remarks mentioned additional guardrails like studies on additional market cap thresholds or annual trading volume would it be necessary. But doesn't comparing the score on the amendment from JCT show that the potential abuse is minimal?
I'm not an economist, so I don't know what's behind that JCT score, but I know that historically when you look at what's happened in the charitable space with respect to appraisals, there's a significant amount of risk in the system if you don't have good guardrails, and this is again one where you can get to a much more administrable and cheaper answer for taxpayers by leveraging market transactions rather than appraisals.
Thank you. I yield back, Mr. Chairman.
Thank you, Mr. Chairman. I want to thank all of our witnesses. Mr. Karcher, as the ranking member of the Oversight Subcommittee, I am really concerned on how the IRS will administer any proposed changes to the tax treatment because of crypto. Given the fact that the IRS has lost substantial staff and leadership capacity, what should the IRS be doing to demonstrate that they will be capable of implementing any of these changes? And does Congress need to consider providing more resources to the IRS if any crypto package passes into law?
The IRS has been significantly defunded, and that's a real problem from implementing any new law or legislation or new systems required, including the changes to reporting that would make life simpler for users and for the IRS. So I think there's a bipartisan history of, in bipartisan bills, adding IRS funding for implementation, and that seems like something that could be worth further study and could be appropriate.
Yes. You know, the tax treatment of mining and staking has rightfully received a lot of attention today. In your testimony, you highlighted parity concerns about deferring tax on mining and staking. However, you also highlighted that the administrative challenges and increased complexity of having to track those transactions over multiple years is a problem. Can you elaborate further on why deferring tax on staking would administratively be challenging, and does this increase the potential for abuse?
I think there are two elements here that create complications. One is that folks who receive rewards will have to bifurcate the reward. So they'll get a slug of newly minted tokens, but they'll also potentially get fees. And you have to distinguish between those two and treat them differently. And then, because you don't tax the rewards until disposition under the bills, that could be very many years. That could be 40 years for somebody who's 30, 40 years old right now and engaging in these transactions.
Yeah. One of the reasons why I think a lot of us were particularly concerned about this indefinite period of deferral and how that can be abused. I'd like to ask you, Ms. Riley, you've talked a lot about the various complex issues that crypto bring up, and you suggest proposed legislation. Can you talk a little bit about how we can best deal with the potential fraud and abuse that can happen with indefinite deferral periods?
I think the important thing is when crafting any rules around indefinite deferrals, making sure that there aren't loopholes or opportunities to perpetually or indefinitely defer. Like, I know we're saying indefinite, but there should be limits on the ability to transfer or do anything under any of the other non-recognition provisions of the code.
Yeah. One of the provisions that Mr. Horstman's bill is to do a 5-year window. And your thoughts about whether or not that, I guess the year could be extended, but the point is indefinite doesn't seem like it seems to me a non-starter. But can you talk a little bit about whether or not you think the 5-year window would be appropriate?
Sure. I think one helpful analogy to look at when you look at the election, for instance, is it's similar to the rules that govern 83B elections, but the reverse. I think one factor, although there are many similarities between 83B election scenarios and this, is typically when you have a person that is deciding not to make an 83B election, there is some vesting window for those transactions in the agreement. Here, we don't have similar facts, so I understand, the deferral window is trying to provide some equivacy there. So I can understand kind of that position.
Yeah. Mr. Karcher, I wanted to also, in your testimony, you talked about the crypto asset reporting framework. Can you elaborate on why this framework is an important part of any package for crypto and why that framework would provide the kind of clarity and oversight, provide us with tools for anti-tax erosion? And how we in Congress can help to push for a review at OMB so that we can implement such a framework.
Absolutely. These are extremely mobile assets, right? And so it's hard to know where reporting is going in some cases. CARF would try to address that by creating global standards, and they would really help both on tax evasion but also on anti-money laundering, anti-terrorist financing, and other kinds of safeguards that aren't necessarily tax, but also potentially for tax. They've been sitting at OIRA for many months now.
Yep.
I'm not sure what the holdup is, but normally they deal with those within 45 days. So some oversight could be appropriate.
Yeah, before I yield back, I'd like to just again reiterate with what Ms. Sanchez said, that I think that there's some room for bipartisan support on crypto, and I look forward to this committee allowing for such bipartisanship to occur. Thanks.
Thank you. I now recognize myself for 5 minutes, and I do want to thank Chairman Smith for convening the hearing. I want to thank all of you for appearing, not only for your oral statements, but for your very thorough written statements. Ms. Wiley, if I could with you, and I did review your statement along with the other witnesses, under current law, digital assets are often not clearly eligible for long-standing tax benefits that are available to traditional financial assets. We've talked about that in the hearing, and you all have talked about that, including the safe harbor in Section 864 of the Code and the securities lending safe harbor in Section 1058. Yesterday, I did introduce a bill that Chairman Smith referenced. The title of it is the Providing Analogous Rules for Digital Assets Act, the PAR Act. The bill number is H.R. 9176. What the bill is intended to do would be to extend the existing safe harbors to digital assets so that foreign persons can invest in the United States markets without being treated as engaged in U.S. trade or business, and taxpayers can lend assets without triggering a taxable event analogous to current treatment for securities. My question to you respectfully is, does the trading safe harbor for digital assets in this PAR Act that I've just described to you do anything different than the current safe harbor available for other financial assets in Section 864, or does it simply put digital assets on an equal footing?
Thank you for the question, Congressman, and thank you for your introduction of that bill. Much appreciated. The trading safe harbor in the PAR Act merely extends the same safe harbor currently available to securities and commodities to digital assets. And this really puts U.S. Digital asset brokers, asset managers, and custodians and similar on a level playing field with non-U.S. competitors. And the tax policy reasons for those trading safe harbors in the securities and commodities context should apply with full force in the digital assets context as well.
Thank you. If I could, and Mr. Zlatkin, if I can with you, perhaps, Congress would create a digital asset under the PAR Act, lending safe harbor that's intended to closely track Section 1058 framework for securities lending so that a qualifying loan of digital assets is not treated as a taxable sale. If we can look at it at lending, can you walk us through how this Section 1058 style safe harbor digital asset loan would operate in practice or in practicality and how it would benefit?
Thank you, Congressman, and thank you for introducing the PAR Act. Section 1058 is a very critical feature of the crypto economy. It allows participants to lend digital assets without risk that will essentially be a taxable transaction. It's a core aspect of our financial services industry with securities lending. One of the first projects I worked on when I started at Coinbase was to try and obtain a ruling from the Internal Revenue Service that existing law applied to digital assets. We were unsuccessful in doing that, but essentially it creates liquidity and it provides the parity that you just described. What it does is it allows me to lend a digital asset to you, and that loan is not a taxable transaction. It's restored to me with a fee, for the borrower pays a fee for that, and I enjoy the same benefits that I had before I loaned it. So it essentially just acknowledges the aspect that it's a non-taxable transaction and puts you at a level playing field with the rest of the securities industry. It's today, despite the absence of law, again calling for clarity, hundreds of billions of lending of this type occurs today at great risk to those taxpayers who don't enjoy the benefit of the provision that you introduced.
Thank you very much. Thank you to all the witnesses. I'll yield back my time and at this time recognize Ms. Chu.
Mr. Karcher, I think the Tax Clarity for Mining and Staking Act contains one of the most consequential and controversial provisions our committee is currently considering, and that is that taxpayers who receive mining or staking rewards could elect to defer taxation on those rewards until they dispose of the underlying digital assets. And there is not in this proposal any maximum deferral period allowing miners or stakers to defer their rewards indefinitely if they choose. Now, supporters of this provision argue that mining and staking rewards are more comparable to an asset or to inventory and therefore should not be taxed until they are sold. An alternative characterization would be that mining rewards are better analogized as a payment for effort taken by taxpayers to verify transactions on the blockchain. Thus, they are more akin to labor income more than anything else. So, Mr. Karcher, what do you think is the correct characterization, and therefore, how should these rewards be treated?
I think really what the compensation or the rewards are for is for validating and updating the ledger and who owns what. And that looks a lot like a service, just like a notary when they're stamping a document, just like an accountant or somebody else who's keeping a ledger. And so it feels like a service. And I think that's completely consistent with the IRS's position. It's consistent with current Code Section 61. It's also consistent with the tax court case from last week that made the point emphatically clear that under current law, those rewards are taxable when earned.
And therefore, what would your recommendation be as far as a period of time for taxation?
As a pure tax policy matter, I think that deferral is inappropriate. I can imagine various reasons why this industry would need potentially or want potentially some short-term deferral to deal with liquidity. I know that the Digital Parity Act has thought a lot about that. If you were to do a short-term deferral, I would encourage it to be quite short, as low as a year. But I can understand the idea that it's hard to have a cash tax payment without having ever converted the money to cash. So, yep.
And one rationale is that the industry portrays miners as small entrepreneurs, but there are only 3 companies that control the majority of crypto mining for Bitcoin. Given this market domination, what compliance concerns do you have regarding this kind of indefinite deferral for large-scale, sophisticated Bitcoin mining companies?
I think a lot of the tools that have been used for tax avoidance over the many years would continue to be able to be exploited in an indefinite deferral situation. There was obviously an amendment that would potentially limit deferral to 4 to 5 years. That would create less opportunities for abuse. If you're allowed to hold until disposition, then you're going to see a lot more ability to use tax structures to not just defer the income, but to eliminate it from income entirely forever.
Thank you for that. And Mr. Karcher, I wanted to follow up. I know in your testimony you talked about the charitable deduction for digital assets, and the act that is before us would allow digital asset donations to qualify for an exemption from the independent appraisal requirement if the asset has a market capitalization of more than $500 million. In your testimony, you suggested that Congress should consider a higher market threshold. Why would a higher threshold be more appropriate? And what concerns do you have with the $500 million threshold as proposed in this bill?
The real risk that you're worried about here is if players have so much of the part of the relevant digital asset that they're able to move the price themselves. Obviously, when you're donating to charity, you would like the value to be high. So if you can take some market action to increase the price temporarily before donating it, that could help you generate uneconomic charitable deductions. And that's what you're trying to, I think, manage. $500 million could be the right number, but I just think that it's worth further study to make sure that you land in the right place. Some of the pressure on that is relieved if the amendment that requires the sale of the digital assets were to be also adopted, because then you're still leveraging the market for price discovery without having the appraisal issues.
And I know you thought that there should be further study on certain issues. What would be the highest priority study?
Right now, I think that the digital assets tax gap is going to be pretty low for the ones that are traded on custodial accounts and really high for those that are not, and I think that's worth a lot of study.
Thank you. I yield back.
I'd like to inform the members that votes have been called on the House floor. I intend to call a recess following Ms. Tenney's 5 minutes of questioning and to call the committee back to order immediately following the vote series. This time, we recognize Ms. Tenney.
Thank you, Mr. Chairman, and thank you to the witnesses for appearing today on this important topic. It's obviously digital assets are no longer a niche corner of the financial system. More than 1 in 5 Americans, we've heard 1 in 8, 1 in 5, but most Americans, it seems, or many Americans now own cryptocurrency, and the total market capitalization of digital assets is, we're estimating, at over $2 trillion. This is a major first step to establish tax certainty and rules of the road for this growing asset class. And as a member of this committee, I know I always think of 4 things: the tax law, rules of the road, and this is a little bit more of an esoteric subject for most of us, but simplicity, transparency, stability, and neutrality, I think, are what we're going to be looking at. I think, Ms. Riley, you mentioned those in some of your testimony. But one of the things I hear from my constituents, not just in New York 24, but all over New York State, is they want to participate somehow in the digital economy. They want to do it safely through familiar vehicles and something they can understand. The same type of exchange-traded products that we know and that we already use for stocks and bonds. But right now, one of the quiet barriers is the uncertainty that is around whether a grant or trust or a structure most crypto ETFs are under can stake held assets without jeopardizing its tax classification. I just heard my colleague on the other side of the aisle mention this. So, Ms. Riley, I loved having you meet with me. It was one of the most informative meetings I had to learn about this interesting new frontier we're on. I want to follow up on what you talked about in my office, and Fidelity has been on the front lines of bringing digital asset products, to everyday investors, people I just described. Can you explain what the current tax uncertainty around the grantor trust staking has meant in practice and how we can fix that? Or let's make it less uncertain.
Thank you, Congresswoman, and yes, I very much appreciated your time. The revenue procedure that came out of Treasury last fall was really instrumental in giving some interim guidance in this area and remove some of that ambiguity. But even though that's a very helpful safe harbor, only legislation can provide a durable and consistent policy for retail investors. And in the retail space, it's very important that the rules aren't changed, for products that they're holding in their brokerage account. And a revenue procedure can be changed fairly easily in the future. And so having that policy codified is really important to provide that certainty to those retail investors going forward.
So we've been talking a lot about the Tax Clarity for Mining and Staking Act recently that codifies recent IRS guidance allowing, you just mentioned, the grantor trusts to receive staking rewards without losing their tax classification. Does that provision resolve the ambiguity you just described, and how will this translate into yield growth for ordinary Americans? And much like what Ms. Chu raised, is there a concern that we should have with that?
The language in the proposed bill does not only codify the safe harbor that Treasury, but it also removes a suboptimal distribution requirement and also provides some flexibility for managing the liquidity to meet redemptions, which is very important for any exchange-traded product. When you purchase one, you expect that you should be able to redeem that whenever you want and not when they have the assets available to meet those requirements. And one thing just to reiterate with the grantor trusts, these basically allow investors to have the same result as if they directly own the asset without having to have a digital asset wallet. They can hold it in their brokerage account, and it's subject to a number of regulations on the security side too, and provides them some safety on that end as well.
So let's stay on the retail investor theme. So let me ask you, for many Americans holding after the ETF holding digital assets, how about through their IRA? How is that affected? And this is a question I want to ask, is how is that going to happen in the same level with the IRA?
The question of...
I mean, does it protect their tax exposure with an IRA?
Yes, I think the ambiguity persists there. There are very specific carve-outs to what's subject to unrelated business taxable income. And things like passive investment income are typically carved out. And even though staking is permitted in grantor trusts, and grantor trusts cannot engage in business activity, which suggests that this income is passive in nature, because it's not expressly carved out under those rules, there's lingering tax uncertainty there, which is could essentially deprive people that are having, investments in proof-of-stake cryptocurrency in their IRAs from a lot of the value proposition of participating in proof-of-stake networks.
So we have to look to Treasury for guidance.
Or legislation.
Or legislation. Thank you so much.
Thank
My
you.
time's expired. I yield back.
As announced, the committee stands in recess until immediately following the vote series.
All right, that is that. So, now what? Right? Now what? They're in recess. I mean, look, this topic is very complex. Look, if you were listening, this was a really, really good example of how something this complex, such as crypto taxation, should have been figured out over the last several years, but yet we really still have not figured it out. So now what? I mean, this is rough, okay? Because this is another example of the government not having any frickin' clue. All right, so what's next? CV9726 says, what's next? What's next is we're looking for Clarity Act to be scheduled in the Senate, all right? That is exactly what we're looking for. We've got CPI data. How about this? Do y'all want me to do a quick video? Let me do it. I'll do a summary video. We'll do it live and we'll knock it out, all right? All right, cool. Let me just give a little pause. Roni, you jabronis.
The financial sector.
Do this right here. All right. We just got done watching the House Ways and Means Committee. And boy, do they have a ways to go on getting regs done. The topic today was taxation. And what we learned as these different experts on the panel discussed, and as we listen to the geriatrics on Congress's panel discuss, there is so much work that needs to be done. And honestly, this hearing was good. It was very constructive. There was a little bit of TDS, just a little. It wasn't crazy. It wasn't off the hook. Nothing stupid like that. These two were probably doing prediction markets on Kalshi or something like that. Who the fuck knows? But it was very constructive. And the hard part was there were so many bits to taxation and crypto that are preventing big money from coming into the space. There's a big burden. There's also a big, taxation paperwork requirement for transactions that really shouldn't be. So those laws are out of date. The other thing is they were 45 minutes late. I'm just putting that out there for you. I was on time for my birthday. Hell, I was freaking early. So now people are asking, what's the next step? Well, the next step is we can have regs, but we just want to make sure that the taxation is right. If you have good regs but shitty taxation, you're not going to want to play with that as a business, are you? No, because the financial part of it's not going to be worth the risk. As a business, you're going to be like, ooh, this tax base sucks. Ask the cannabis players out there. They pay boatloads of taxes and it hurts them. Okay? So you can still have Clarity Act pass. It would just be a messy tax situation until that gets done. So the next step is actually waiting for the Senate to formally schedule a floor debate for crypto regs for Clarity Act. Once we get that date, we will have a much better idea of what we're looking for. Now, that being said, they have released the text of the Clarity Act. All right? It's out there. Easy to look up. If you want to look it up, no, it's not linked in the description down below in this video. It's all over the freaking internet. You're welcome to read it. Go on X and you'll find it. All right? You can go on my X too because I don't care about it. Ha 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 ha! Funny joke. So the thing is, we got a ways to go. But Clarity Act can proceed without this. This was just a good example of how right now money is not going into crypto because the tax situations are an absolute friggin' disaster. So, we're going to wait to see when we get further information on this. They even said that they've got a lot more to go. Clarity Act right now, 48% chance. Price of oil right now still high, which is putting what? Inflationary pressure on the globe. Now, tomorrow, the 10th of June is what? CPI data. I think we should have a live stream for that. Yes, we should. I think we should. So, CPI data tomorrow, June 10th, what are we expecting? Nasty numbers. We're expecting this chunk right here to start hitting us. This crazy high oil blip, crazy high gas price. Because you've seen over the last couple weeks, gas prices have rolled down a little bit. Just a little, not a lot. So this report that we're going to be getting into is when it was really, really nasty. So people are expecting some gross numbers tomorrow. Texas Sweet Tea saying, we'll do it live. We will do it live. We're doing it live right now. Circle in the red today. Circle, though, member, makes money as a company. So Circle right now is feeling the pain of its sector under fire and part of its business model under fire. Remember, Circle has made money with and without the Clarity Act. They're going to rely a lot on the Genius Act. It would be better with the Clarity Act. Exchanges like Gemini, who I did buy today right before I went live, they're down 7.28%. Exchanges like Gemini, well, if spot volume is going to suck ass the way it has been, here's your spot volume for you over the last year. That's lots of red there, Captain. Yeah, that's not a good ship. That's going to put players like Gemini into the hurt train. Why? Because they're not making money on spot volume, but they can make their money on prediction markets and other things. And that's why I believe players like Gemini can turn it around. They can clean up their books. They already are diversifying. They're already cutting the costs. Crypto volume comes back. That's just icing on the cake for these players. STRC in frickin' trouble. I am doing a vid right now, Texas Sweet Tea, and I'm mentioning you in the vid because you're in the comments, because we're doing this on the back of a live stream. STRC, not close to par yet. Right now, sitting at $96.18. Remember, when it's at par, that's when the cash money machine starts really printing for the sailor man. BTC, way below his price. $62,000 right now. His average, $75,000 and change. My guy's at a $13,000 loss for the 840 plus thousand BTC that he has. That's not a good number. What's also not a good number is XRP at $1.14. Hasn't really been moving. In fact, one of the big depressing things with XRP has been what? The fact that it hasn't made a move. Zcash made a move. BNB's made a move. Hype's made a move. XRP hasn't made a move since that nastiness of the 6th of February on. In fact, we've lost support. Volume even under 2 billion right now. It is a Tuesday, a Klaus birthday Tuesday. Yes, this is a bad looking chart. And guess what? Volume sucks. So there are opportunities out there. You just have to be smart about it, okay? You can't fall for fake narratives, and you have to understand that Clarity Act odds, all right? Them right now, they're at 48%. Clarity Act odds, what have you noticed? A pretty hefty downtrend since when? Since right here, early part of May. Coinciding with what? More pain train on the screen as players out here are like, oh crap. We might not get regs, but we might get a SpaceX IPO. By the way, the SpaceX IPO, not only on Bybit, but guess what? Also now on E-Trade. There you go. People getting into SpaceX IPO, for every dollar that goes into SpaceX IPO, that's a dollar that didn't go into what? Crypto. That rhymed. That was pretty hot, by the way. So here we are. Waiting now to see if Clarity is actually dead. Because when the market realizes that Clarity is actually dead, see, I believed it's been dead since March. I can be wrong. It happens every once in a while. But if Clarity is actually dead and it finally sinks in to even the hopium players out there, yo, we are in for it. There's a big group of people saying July 4th. Well, when that July 4th date passes, then what are they going to do? July 20th, July 27th, dangle the carrot further, and that's my point. More and more the market is realizing that Clarity Act odds are shrinking. Every day that goes on, it's making it harder. That's putting pressure on BTC. Store value play, kind of hard to advertise right there. That's your 1-year chart for BTC. That store value play, that is a tough cookie to sell. If you want people to fight inflation with BTC and they live in a country that's all jacked up, cracked up on inflation, and you want them to invest in BTC and they invested their money anytime last year from June all the way through October, they are now effed. Those people that really don't have savings just lost 50% of what they did put away trying to fight inflation. Yeah, that's not good either. So the store value narrative got destroyed. We're now looking for a new narrative in crypto. Payments? Yeah, that's a narrative, but who's doing payments? USDT, USDC, PYUSD, RLUSD, stable coins. Tokenization, yes, it's happening. Is it benefiting the chain? XRP made $350 in fees over the last 24 hours. The chain did. Ooh, you're going to fucking buy yachts for everyone with $350 in the last 24 hours. This thing has been going on for how many years? So no, you're not going to get rich on the burn rate. So there you go. That's the summary of what happened today. Inflation's still going to be high. Might be later. Depends. It's my birthday. CPI data tomorrow. Yeah. Also going to be high. Expectations for Clarity Act. Not high. Not high. Okay, that's a difference. Remember, not high is down here. High is up here. Here. Not high is down here. A little different. High. Not high. Not high. Okay. We're clear there. Some players are getting dumped on unfairly. A bunch of you out there are going to get into the SpaceX IPO, which is going to drain liquidity even more. 436 of you have voted. 25% of you are looking to get in that SpaceX action. And you've got taxation in crypto not even close to being figured out. Choo-choo what? Well, you know the deal, lemon peel. Choo-choo bitches. There you go. We just did a video live. I'll snip that up a little bit, mix it up, and then boom, shock-a-laka. Any questions? Any comments? I mean, it's just, look, this is still risky. There's no regs. This is just the deal. This is risky. There's no regs. We don't know what's happening with Clarity. The odds are going down. Every day that ticks on, it gets harder. This is rough for the market. There's a lot of misinformation out there. Oh, Trump's going to want to sign the Clarity Act July 4th. Oh, he's going to make it. No. You're falling for the hopium bullshit again. Careful. Texas Sweet Tea says that was perfect. Edgar Doceris, hopefully I said that right. Or Eduardo Carreras. Hopefully, it depends on where you space the name out. Says thank you. You're very welcome. It is more weight on Clarity. Are they still in recess? I am not going to cover them for the rest of today. I think what I'm going to do is I'm going to enjoy my birthday. Just throwing it out there. This has got a ways to go. I'm going to be honest with y'all. This has got a ways to go. There were, I believe, 6 things that they were going to be talking and debating on here. So, yeah, we've got a ways to go. So what I'm going to do is I'm going to do this. Stream is going to end at 5:15, okay? 5:15 p.m. Eastern Time. The stream ends. Get your cues, get your comments in now. Because then I'm going to go, do birthday stuff. I was going to try to get a second run in, but these people were A, 50-something minutes late, and B, they went on forever. Just throwing it out there. Please spin the wheel, Klaus. Happy birthday. I don't have a wheel to spin. Oh, Hobby Time with Chris says Klaus works for the government, so he knows they're lying. I definitely don't work for the government. Anyone that's watching this channel knows sure as shit I would never waste my time working for the government. Texas Sweet Tea dropping support on channel saying, happy birthday, Klaus. Let me write you a nice little note here. If I could type on my keyboard. Thank you so much, ma'am. Means a lot. A lot is 2 words. Thank you, everyone. Give Texas Sweet Tea a big thank you for supporting. Oh, the bike wheel. Oh, we could. How well can we see? Can we see the bike wheel? Yeah. Okay, so now these are race lights. These are probably one of the fastest hubs. Fastest in terms of, friction. This hub will just spin and spin and spin and spin. Seriously, this thing spins. My other road bike, I did it with the front rim on that one, and it did not spin as freely as that one did. That one just keeps frickin' spinning. Yes, Dexter saying thanks. No, it's thank you to all of you for watching. For those of you that ordered the merch action, I'm shipping out a whole bunch. Unfortunately, I could not run them to the post office today because I had to do a live stream. But I've got, I think it's 9 more on my counter over there ready to go. I will ship that out tomorrow. I do have a P.O. box if anyone is interested. I do have a P.O. box if anyone is interested. Richard Hodson said, you gonna get a special birthday gift, dude? You know, the special type. That was last night. I was smart enough to know to do that last night and not tonight. And you're like, bro, why not tonight? Well, because tomorrow I have to get up early for CPI data, so I didn't want to do that the night, before and then be up late. You see my point. There you go. Happy birthday, Klaus. Enjoy the day. Thank you, Hobby Time with Chris. I hope you all enjoy your day too. Please, on the way out, hit the like button. Share this video or this channel with anyone that's interested in crypto. Because remember, I bring you news, good, bad, happy, or sad. Right? I tell you everything that's going on about the market. Not just the hopium. By the way, that wheel is still spinning. I'm sure you noticed that. Like, Homegirl is still spinning. That's pretty impressive. The prison economist says, drop in support on the channel. Thank you very, very much. I'm trying to give you a like on there, but it's not doing it. It's only letting me click the picture. Thank you very much, kind sir, for that support. That is the first super on the live stream. Greatly, greatly appreciated. Backdoor birthday present. No, unfortunately, that was a no. Let her rest. No, like, for real. Like, for me, like, I didn't want to be up late. CPI data tomorrow. Look, I'm dedicated. I'm bringing you the news on my birthday. I've worked all day today. I got up early so I could do stuff. I did a whole bunch of merch orders, a whole bunch of emails. I love this stuff. This is fun for me. Like, I'm having fun. Like, I hope everyone sees that. The prison economist says, I am a bitch. No, you're not. No, you're not. Appreciate it. Greatly appreciate it. No, this is fun. I really do enjoy this. I wish there was better news with crypto. Like, everyone's like, oh, bro, you're always so negative. No, if the news sucks because it's a bear market, the news sucks. If it's good, everyone sees. I'm super happy about stuff. I'm realistic, but I'm happy. By the way, RIM is still spinning right there. So, yeah, for me, I think it's important to enjoy what you do. And I really enjoy doing this. Let's get those last minute questions and comments in now. Texas Reti saying, we appreciate your dedication. It's fun though, dude. Like, if you ever wondered why I get into ultra marathons, ultra cycling and stuff like that, I like that constant grind. There's something about it. Like, I love just that. I love the grind of it. Seriously, like, I'm just so, like, into that. Like, it's nice. It's really nice. It's just part of who I am. Let's see. Koof Nation says, after the Clarity Act passes, do you think the crypto space will move like the SP 500? Yeah, Clarity will definitely bring money in. But you'll see, taxation can bring yet another round of money in. And that's what we've learned today, right? Or that's what some people have learned today, is that crypto money is going to come in waves. Clarity Act is going to bring a nice chunk in. You're also then going to see what? Tax rules, favorable tax rules bring another chunk of money in. So yeah, I think you're going to see many more waves of this. Adoption is going to be different than how people promised it. I think everyone promised adoption to be like, oh, it's going to be something like a cell phone that everyone uses. No. I mean, no one's really built anything that fucking cool yet. So, don't expect that anytime soon. You just have to think of this realistically. RIM is still spinning, by the way. For real. I am fucking shocked at that. Wow. Now, those are hubs, man. Those are effing hubs. Richard Hodson says, no cycling for days. Well, I am going to cycle tomorrow lightly. And I've got a big race on Saturday, and then I'm going to do another long ride on Sunday, so I get it in a good training day. What about that reverse carry trade that everyone is talking about? Reverse carry trade, it reminds me of when it was like, what was it? Was it Evergrande? And like the Chinese company that was going under and everyone freaked out that it was going to pull the market down. Nothing ever happened. A lot of these things are nothing burgers. They're just good, like, searching bullet points or good fear points. Oh, BlackRock moves this. And it's like, no one gives a fuck because it doesn't do anything. Evergrande was one of those where people are like, dude, that was hyped up to be so much and it really wasn't. The Japan carry trade thing has been brought up now a few times. Like, that's getting old. So just keep that in mind, Again, thank you, everyone, for the support. I greatly appreciate it. Just a Vibe says, how do you think Clarity will affect gold? That's a great question. Here, let's bring up gold, okay? Let's get rid of the circle chart, okay? Let's bring up gold, and let's talk about that real quick, because I know there's a lot of you silver stackers in here, and gold stackers. when does gold do good? When things are really unstable and really volatile, right? So, United States last couple years has been a little bit more volatile. A little change in leadership has kind of helped out with the price of gold. Inflation globally has been a concern. But we also had a really, really stupid run-up from August of 2025 to January of this year, January into March. A stupid run-up, something that didn't make much sense. Gold, I think a lot of people could say above 4,500 was not going to last. And that's okay. It doesn't need to run up crazy because look, zoom out. That's what it did. Now, I do think gold is going to find a footing, hopefully above 4,000. That would be nice. Otherwise, you're looking a lot closer to the 3,800 mark. If that's the case, you start getting a little bit more nervous, but you're hoping for 4,000 on gold. Will Clarity Act take some of the thunder out? Yeah. Anytime a market gets some sort of like regulatory oomph, it can definitely steal thunder from other markets. SpaceX's IPO is going to take money from other markets. And that's kind of thing. Money is flowing in and out. People are chasing money. Crosby Hillbilly, hopefully I said that right, says, Cos, do you think there will be a favorable tax rules for us? Not anytime soon. That's what we learned today. The tax rules are so far away. So far away. Prison Economist says, I've been so busy slacking. So sorry if I missed it, but is Brooklyn still afoot? No, she went after one of our dogs twice. And I had to like save her because like my dog was going to destroy her. My dogs are freaking huge. And supposedly she was socialized with other animals, said she was good with other animals. She wasn't. She was great with people, amazing dog with people. So I picked her up, and as I picked her up, my dog came and crushed my hand, and that's why my hand's all messed up. Happy Time Chris says, I'm cheating. I'm going to get a burger. Yeah, I might do something small tonight. Something small. I seriously do appreciate everyone for supporting the channel. Appreciate all the birthday wishes. Thank you very much, everyone. Like I said in this live, we learned that what? This is a very complex task with taxation. And Congress isn't anywhere near getting it done. Choo-choo what? Well, you know the deal, Lemon Peel. It's choo-choo bitches. And I'll hang out in the comments a little bit with you.